We're at the beginning of a new frontier here.
This is a broad-based demand for capital.
SpaceX orbital AI infrastructure is a venture capital style bet that's being treated as index fund mature and certain.
The Musk premium is extremely significant. It's critical.
Speculation is alive and well. Expectations are very high, and this really sets up the stage for disappointment.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning, live from New York City. Welcome to Bloomberg Surveillance. Oil plunging as the U.S.-Iranian truce is consolidated right now. Stocks and bonds surging ahead of world leaders gathering in France for the annual G7 meeting, and investors looking for guidance from a new Fed chair, Kevin Warsh, at Wednesday's Fed meeting. For now, very much risk on, at least in here in orange and blue, Annmarie Hordern, as the U.S. and Iran lower the temperature. It seems like everyone is cheering this morning.
Yeah, everyone's cheering, especially the markets, when they look at what's going on in terms of Iran. And obviously New York, in terms of what's going on for the Knicks. We'll get to that later. I'm back from San Antonio. So you're saying that it's very much risk on, U.S.-Iran lowering the temperature. The question I have is for how long? Because we are getting very different reports from Fars News Agency in terms of what they see this deal going forward and progressing, in terms of what the White House sees it going forward. What the market cares about right now is that likely those 600 tankers that are trapped, potentially they're going to be the ones that get out first.
Yeah, the idea is that the Strait of Hormuz at least is going to be open for traffic at least as of Friday, and then potentially for 60 days as they deal with some of the hairier issues. In the meantime, the G7 meeting really is going to be the place where all of this is announced and celebrated, including some of the attendees that are not part of G7, the Middle East, as well as some of the tech founders. What exactly is going to be coming out of those meetings?
I think what we want to look forward to into the G7 is how much these allies line up with the United States in helping to reopen the Strait of Hormuz. Remember, NATO said by July, as long as there's a peace agreement, we are going to be sending vessels. Well, it looks like now the UK, Italy, some of these countries are saying we are going to help the United States. Remember, the Iranians mined the Strait of Hormuz. You have to clear those mines and give the confidence to these captains on these ships to take that journey to traverse the Strait of Hormuz and not be attacked.
In the meantime, oil prices are plunging, and you can see a real kind of sense that maybe this is over. If you take a look at equity markets surging around the world ahead of what is going to be a massive week, up 2% on the NASDAQ futures, up 1.5% on the Russell 2000, and the S&P up 1.2%. When you take a look at the bond space, this is what's underscoring the idea of potentially a broadening out in the equity space, plunging more so actually, frankly, in Europe than over here in the U.S. But the 10-year yield down 3 basis points. The 2-year yield down 4 basis points. Now just one rate hike being priced in for 2026, 4.04%. And the why behind it has been the oil space. You can see oil prices plunging to the lowest levels in more than 3 months, down more than 5% on Brent and WTI. In a sense, and Annmarie, you were talking with some of the people who are most involved in this, including Chris Wright, the Energy Secretary, talking about how there already are a lot more barrels flowing through than many people had expected.
Yeah, on Friday in Houston, Chris Wright said 7 million barrels a day are now flowing to the Strait of Hormuz. That's where they see the flow. Then I spoke to the Chevron CEO, Mike Wirth, and his team sees it more as about 3 million barrels a day. JP Morgan has it right in the middle at 5 million barrels a day. But what we do know is that there was about 2,000 vessels that are trapped. It's closer now to more than 600, 1,000, according to Kepler data. So vessels are getting out. The question, of course, is going to be how long until we get to the exact flow we had before this conflict began.
Yeah, and get the barnacles off some of these ships so they can get going. Jonathan Ferro is off this week, conveniently, as World Cup heats up. Coming up this hour, Cameron Dawson of NewEdge Wealth will be joining us as markets rally on news of a U.S.-Iran peace deal. Rocket Lab president and CEO Peter Beck on space as the new AI frontier, and Leslie Falconio of UBS predicting a hawkish turn at the Federal Reserve. That meeting is on Wednesday. We begin this hour, though, with stocks pushing higher and crude sinking as the U.S. and Iran reach a tentative deal to end the war. Bloomberg's Abir Abu-Ammar joins us now from Dubai. Abir, what's the latest in terms of what actually has been agreed to that will go into a place on Friday?
Good morning. So look, what we know as of now is that this MOU is going to be signed on the 19th. That is Friday at the sidelines of G7. We don't have a lot of clarity on what exactly are the details in the MOU. What we know so far is that it will ensue the immediate reopening of the Strait of Hormuz and then be followed by a 60-day period where more technical negotiations will take place with the goal of getting the Iran nuclear program on the table, essentially, and that is what President Trump said will be negotiated. Now, some details have been coming out over the past hour or so from Fars News Agency on the Iranian side, saying that for this 60-day period, Iran and Oman are not going to be charging tolls for the tankers and the ships that are going to be going through. Now, if you remember, over the past couple of months or so, we've been discussing this mechanism that Iran was negotiating with its Omani allies to start charging tolls once the strait reopens. Now, Iran does say that for this period it is not going to do that, but afterwards that may very much be the case. It's unclear what the U.S. response to this mechanism will be. We still have to wait and see what the exact details in this interim deal are going to be, and it is going to be released after the signing takes place in Geneva on Friday. But what we know for the time being, again, is we have the immediate reopening of Hormuz. We have the 60-day ceasefire. Once that comes to fruition, if the nuclear program is negotiated, that's good news for the U.S. If not, they could go either way. They could either extend the ceasefire further, or President Trump did threaten to go back to military strikes against Iran. Now, some of the concessions that we've discussed multiple times over the past couple of months, that includes the $24 billion of frozen assets, the oil sanctions, the lifting of those we don't have much clarity on yet. Overnight, when the deal was, or when the agreement was reached, both sides have started very quickly coming out with diverging statements about what concessions were actually reached. And so we still have a little bit of lack of clarity when it comes to what the U.S. agreed to and what Iran, in turn, had agreed to. So everything hinges on that signing ceremony that will be hosted by Pakistan later this week in Geneva. So we wait and see what happens there.
Abir Abu Omar, thank you so much for being with us and all of your reporting. Here's a view from Wall Street. Cameron Dawson of NewEdge Wealth writing, after a small pullback to trend, the market mood is still resoundingly risk on despite real risks. This uptrend should be respected. Cameron joins us now for more, and I believe you wrote that even before the agreement was signed.
Yeah.
This seems like a different moment, and the market is treating it as more real as some of the other inroads into a peace deal. What's so different this time around?
I think what is different is that there seems to be at least some confirmation that there is some kind of agreement moving forward with Iran, and that is certainly breathing life into areas of the market that have lagged since the start of the war. If you look at the non-S&P 500 AI trade, meaning those areas that don't have any exposure to AI, they're only up about 1% since the beginning of the war. Compare that to AI, which is up 47% since the start of the war. So we know that this market has been able to make new highs because of the AI trade, with a lot of other areas of the market left behind. So it's those left behind areas that have the most potential, of course, for some kind of catch-up trade, some kind of bid, as we see a broadening out potentially in some of this kind of relief in the rotation.
How much is this really tied to the idea that it takes heat away from the central banks to have to be sort of punitive and raise rates in the face of inflation?
I think that that is a big factor in all of this, because if we looked at the upward pressure on oil prices that fed into gasoline prices, fed into diesel prices, all of that created that upward pressure on inflation, upward pressure on interest rates, and expectations for a more hawkish Fed, or potentially more hawkish Fed. So it's those areas of the market that could see the greatest potential. Look at the things like financials finally trading back above their 200-day moving average on Friday. You saw the equal weight S&P 500 hit a new high on Friday. So maybe markets are omnipotent and they were just kind of sniffing out some of this as we saw the broadening come back. But that certainly can relieve some of the pressure in areas of the market that had been, again, left behind.
The devil's in the details, though, and that's where this deal is going to be incredibly challenging, between what the Iranians have on their red lines and what the White House has. Does the market not care about that longer-term deal, given the fact that this does look like we're going to have the Strait of Hormuz open?
I think the market just cares about how much oil is moving through the strait. Whether or not what that deal looks like, the market, I think, doesn't care as much. And it will then focus on what is the impact to gasoline prices. We have the daily average national gasoline price that's about just slightly above $4 a gallon. Do we see that continue to fall going into a period of peak driving season? Because again, it's gasoline, it's diesel prices that feed into inflation prints. And as we saw inflation on a headline basis reach very high levels and possibly eye-popping levels last week in the data, and even core inflation move higher, that of course what was putting pressure on the Fed to potentially hike. But now those rate hike backs for the full year this year look to be at just 72% of the chance of a hike by the end of the year.
Yeah, this morning, national gasoline is just over $4, $4.06, which is kind of insane given the fact the Strait of Hormuz is still closed. Is there any scarring, though, that you can see continue from this episode?
There's certainly going to be scarring because we know that infrastructure has been damaged. And so the other question is, should you have a premium on oil prices given the fact that if Iran is allowed to charge a toll, does that effectively give them some kind of hegemony in Middle East oil flows that suggests that we can't go back to pre-war levels of oil prices, which just would keep that upward pressure on gasoline prices as well. So I think that is the big question of how much markets are willing to look past some of that infrastructure destruction as well as continued risk in order to push oil prices even lower.
As you mentioned before, the market moved on. The market really has looked through a lot of this and looked to the areas that are potentially immune to a lot of this, which is the existential spending on artificial intelligence and including space. And we've seen the SpaceX IPO continue to outperform. It was up some 19% from the IPO price on Friday. Today, you're seeing it pop another 5% in pre-market trading. Is this healthy? Does that give you a sense of calm and ease, or does that give you a sense of concern?
I mean, it's been a full party on Garth kind of risk on moment for this market because it's not just SpaceX. It's, of course, what we've seen in unprofitable tech, up over 60%. And given the fact that how overbought some of these areas got back just a couple of weeks ago, and they had a little bit of a correction, pulled right back to their 50-day moving average and kept on rallying, that certainly shows you that risk appetite is completely alive and well. I think the question we have for the AI trade going forward is that if you look at the people spending the money, the hyperscalers, these are the people that are fueling the rallies in these infrastructure trades. Names like Microsoft, Oracle, Meta are all trading really heavy. They're down some 20, 30% off their prior highs. If you continue to see the market effectively punish them for spending all of their cash flow and also other people's money with debt and equity market raises, could we be in a scenario that as we look to 2027, there's less upside to hyperscaler CapEx forecasts simply because the market is not rewarding them anymore?
Can you see a time where you actually are unprofitable at a place like Microsoft or, say, Amazon?
Not unprofitable, but certainly free cash flow negative. And that's all because of the way the accounting works, given the fact that they're able to spread out the depreciation of these hyperscaler, of this CapEx over a longer period of time. Also, don't forget they're getting a boost from accelerated depreciation because of OBBB. That's effectively allowing them to get the tax benefit of spending all this money as well. So you do have names like Amazon that are now free cash flow negative because they're spending so much money, and that is showing up in the share prices. And I think a really big question as we go into 27 is the street is expecting to see growth in CapEx of another 20 to 50%, depending on who you talk to. However, that's on a basis of 80% growth this year. And you're already starting to see the market push back a little bit on those CapEx increases. Look at the way that Oracle is trading. So all of this AI CapEx infrastructure trade is based on this idea that hyperscalers will continue to increase their CapEx forecasts. If they don't do so, that would be the area or the opportunity for disappointment.
Cameron Dawson, you're going to be sticking with us, which is a wonderful thing. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. The U.S. and Iran reaching an interim agreement to end the war and reopen the Strait of Hormuz. Officials from the two countries will meet in Switzerland to formally sign the agreement on Friday, setting the stage for 60 days of negotiations on the fate of Tehran's nuclear program. SpaceX shares are trading higher in the pre-market following its Friday debut that vaulted it into the ranks of the world's most valuable public companies. Today will mark SpaceX's first full trading session. It gained 19% on Friday. The New York Knicks are NBA champions. The city will hold its first ever ticker tape parade for the team this Thursday. Mayor Zoran Mamdani saying he'll hold a ceremony at City Hall where his administration will present the Knicks with keys to the city. And that is your Bloomberg Brief. Lisa.
All right. AMH.
First championship since 1973.
Go ahead.
I was there.
I mean, you're just waiting for it.
I saw Patrick Ewing. I saw everyone. It was actually incredible. And it really was the sixth borough of the night because honestly, it felt like 75% of the stadium were Knick fans.
All right.
Everyone knew it was going to be Game 5.
Okay, Philadelphia, when they said Philadelphia is a stretch, but you start talking about San Antonio. That said, it has been an amazing moment where even a Yankees fan and a Mets fan can come together.
This is why it's so incredible for New York.
And have enthusiasm for New York City.
Everyone could coalesce around the Knicks. You could be a Jets or Giants fan, Mets or Yankees, but everyone will love the Knicks. This is so incredible for New York.
Maybe the Mets can actually stage a comeback now. Up next, the AI race on the global stage.
We're leading China. We're leading everybody in the world with AI, and we want to keep it that way.
We're totally leading the AI race and the artificial intelligence.
America is going to win it.
Tyler Kendall joins us from the G7 summit in France next. Plus, more with Cameron Dawson of NewEdge Wealth. This is Bloomberg Surveillance. The collective cheer you hear is New York City celebrating the New York Knicks, as well as people looking to a possible truce between the U.S. and Iran. Right now, you can see markets around the world collectively sighing relief that maybe, just maybe, we'll start to see oil and all the other commodities flowing through the Strait of Hormuz. S&P futures up 1.2% in pre-market trading. You can see the euro gaining versus the dollar, and this is sort of a collective dollar weakening as everything else starts to broaden out and see the potential gains from a less constricted Strait of Hormuz. 10-year yields lower by about 4 basis points, 4.44% ahead of that Fed meeting on Wednesday. Crude is the big driver, down 5.7%. $80 for WTI. We are talking about the lowest levels going back to March as people take a look at how this market can right size after a number of months on the sidelines. Under surveillance this morning, the AI race on the global stage.
We're leading China. We're leading everybody in the world with AI, and we want to keep it that way. We're leading everybody, and I don't want to do anything that's going to get in the way of that lead.
We're totally leading the AI race and the artificial intelligence.
America is going to win it.
Here's the latest. Executives from the largest AI companies, including Anthropic, OpenAI, and Google, all heading to France along with the world leaders for the G7 summit. The gathering comes after Anthropic shut off access to its most advanced AI models in response to a U.S. government order. Bloomberg's Tyler Kendall joins us now. Looking beautiful in France. Tyler, it looks like it's a lovely scene there. I'm just curious from your vantage point what the significance of some of these tech leaders being at this G7 meeting really means.
Well, Lisa, this face-to-face meeting between these tech CEOs and G7 leaders is going to be just as much about the potential opportunities around AI, but also the potential risks, because this move by the Trump administration regarding Anthropic marks what's considered to be the most significant move to date by U.S. officials in regards to any AI company's internal operations. And the Commerce Department outlined in this order and threat of an export ban that Anthropic needed to take this action until the U.S. can bolster its own national security apparatus. As people familiar with the matter tell us that top company executives are now engaging directly with Washington, increasing that dialogue to try to address some of these specific security concerns, because Anthropic says that it believes that the government took this action amid concerns that you could essentially bypass some of the guardrails regarding Mythos. But they added that they think that the U.S. is going too far. They say that this is a disproportionate response, adding in part, quote, quote, "We believe this is a misunderstanding and we are working to restore access as soon as possible." But Lisa, it is definitely sparking the conversation here on the ground. And since we're at the G7, we've actually heard from at least one G7 leader so far, and that's Canadian Prime Minister Mark Carney, who said that the Trump administration's move just underlies and underscores relying too much on only a handful of AI tools. So I think this meeting is going to be a lot about cooperation, but also about that competition.
Tyler Kendall, thank you so much. Cameron Dawson of NewEdge Wealth still with us. Cameron, how much are you looking at some of the regulation and some of the crackdown, particularly when it comes to Anthropic, as a path forward for what other tech companies can expect?
Well, I think it's interesting when you think about how people are starting to use some of the Chinese models, not because of security, but because they're simply cheaper. And we were in this environment where people were token maxing and kind of ignoring some of the high costs of the US-based models. But now all of a sudden companies are waking up and saying, oh my gosh, this is a lot more expensive, and even sometimes more expensive than the human versions. And I think the other thing that's really fascinating is that empirical research put out a chart that looked at the amount of code that's being written by AI, but then the amount of code that's actually being deployed by AI being much, much lower. So it's suggesting that as much as there's these security concerns, there's also cost questions for companies as they think about how much they're going to rely on AI to replace humans.
Do you think this is also a signal that the Trump administration is going to have a bit more of a heavier hand when it comes to regulation? Because at first it was, let the models rip, let the competition go. And now it seems like they're really pulling that back. These are some of the biggest export controls we've ever seen.
Yeah, not only to have a heavy hand in regulation, but then also potentially take a stake in the companies in order to have kind of this both sides of things. Look, I think it's obviously this technology has the potential to be very dangerous, which is why there was a stop on some of the rollout of it. And so it suggests that there needs to be regulation. The question as well is, will there be regulation on the state level as well? That's been something that's been debated. So, clearly this is an arms race. The question is, does this matter for markets in the sense that will this stop or slow down any of the spending that's been so important for what's been driving markets higher?
What do you think it means for the upcoming Anthropic IPO?
Well, goodness, I mean, I think that it's a great question, and I don't think that there's necessarily any way to handicap it. The question is, will the market still be willing to look through the fact that they are burning a lot of cash? And I think the key metric to watch for the Anthropic IPO is if you continue to see the huge acceleration in revenue. You've effectively had revenue go from $9 billion at the start of the year to nearly $50 billion today because of the adoption of these models. So if any of this regulation slows the adoption of the models, does it necessarily or potentially slow the growth in the revenue, which of course would be a negative as they were trying to issue shares of a deeply unprofitable company?
We're talking about regulation. We're talking about the potential crackdown with huge controls put on Anthropic's latest and greatest model, the Fable and the Mythos. There is a question around the use of social media for kids under the age of 16 over in the United Kingdom. I'm looking this morning at the AI-related names in the market, pre-market trading. Amazon shares up 1.5%. You could see Alphabet up more than 2%. Meta also rising. There isn't a sense right now that really there is any concern. Is it considered a good thing because it will allow them to create a moat around themselves and it will create a more difficult scenario for anyone trying to be a competitor?
Yeah, look, I mean, these are effectively monopoly businesses. At least their legacy businesses were monopolies. And so if you have regulatory moats that make it harder for new people to enter into this market, it means that it's just far easier to defend your monopolies. I think, though, the thing with AI to remember is that AI effectively is a competitive force that could disrupt these legacy monopolies. And that's the really big question of how these companies continue to spend, because they're spending all of the cash from their legacy monopolies in order to compete in AI. But the question is, will there be one ring, one model to rule them all, which means that not everybody will get the return on invested capital that the market would like in order to justify this degree of heavy capex.
Cameron Dawson, wonderful to see you and kick off a really busy week with you. Cameron Dawson of NewEdge Wealth. Ahead of that Fed meeting on Wednesday, and as markets really look to a potential truce between the U.S. and Iran, as reopening the Strait of Hormuz and allowing oil prices to once again be something on the back burner. Coming up, Rocket Lab president and CEO Peter Beck, as the space sector gets a boost from the SpaceX IPO. I promise there won't be too many bad jokes about blasting off and going to the moon. Plus, Yahaira Anand with your morning movers. That stock extending gains after its trading debut. This is Bloomberg Surveillance. This is enthusiasm, yes, but it's tepid enthusiasm for the potential for some sort of truce between the U.S. and Iran. It could reopen the strait as soon as Friday and get ships going through. Some 600 tankers and other ships are waiting on the sidelines to go through, possibly more that have had their transponder off. When you take a look at markets, they are up. You do see a rally across the board, but not necessarily as much as you might expect. Over in the U.S., S&P futures up 1.25%. The NASDAQ doing better, up more than 2%. The DAX up 1.25%. Again, you would expect it to be more if you truly believed that oil prices would go plunging down. And then you could see the Kospi closing out up 5.2%. So that levered trade over in South Korea getting the boost that the NASDAQ is getting as people can go back into the tech trade. When you take a look at the bond market, you could see that a lot of central bankers are getting a reprieve. In the U.S., heading over to Wednesday with Federal Reserve Chair Kevin Warsh taking his first time at the podium for this press conference. Yields lower, exactly what he wants to see. Two-year yields down 4 basis points to 4.04%. Definitely giving a reprieve at a time where a lot of people are saying, how is he going to toe the line between President Trump and potentially markets looking for a very different outcome?
Well, this is a gift for Kevin Warsh, and it really kicks off the Warsh era where he's going to be answering a lot of questions. A little bit easier for him, saying, well, actually, we are seeing potentially the reopen of the Strait of Hormuz, so we can maybe look through earnestly this oil shock, because prices, and we see that on the board, are dropping. You have WTI at $80 a barrel today. Of course, devil in the details. Fars News Agency is already saying that, okay, the Strait of Hormuz will be open for this 60-day extension, but then after that, they're going to toll for things like safety, navigation, environmental services. That's what the regime is saying. The President of the United States is saying we will not accept a toll. Arab countries will not accept a toll. So this is the start of a deal, but it's going to be messy.
Yeah, you can see those oil prices falling to the lowest going back to the beginning of March, really, down 5% on WTI. $80, an $80 handle after getting up close to $100 just a couple of weeks ago. Brent at $83.05. 3 hours away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. Well, as SpaceX heads to its first full trading session as a public company, we are seeing shares getting a lift up nearly 5.5% in the pre-market after its blockbuster debut. And helping to fuel those gains are some comments from Elon Musk over the weekend saying that SpaceX could generate $1 trillion in revenue by 2031. That would be a dramatic leap from the $19 billion it generated in revenue last year. Meanwhile, as you said, we are seeing a risk-on mood across markets after the U.S. and Iran said that they agreed to a deal to end the war, and that's helping to fuel gains across the semiconductor industry, but especially in the higher beta names like Micron and SanDisk. Micron jumping 7.3% in the pre-market. And at the same time, as you said, since this deal does include the reopening of the Strait of Hormuz and oil prices are moving lower, that is helping to lift the airline stocks with names like American, United, and Delta all rising in the pre-market on expectations that lower jet fuel costs could help margins, and also this idea of people being more willing to travel with the war over and prices potentially coming down. Lisa.
Thank you so much, Yahaira. On our radar this morning, the U.S. and Iran reaching an interim deal to halt the war and reopen the Strait of Hormuz. Officials from both countries will meet in Switzerland on Friday to formally sign the agreement. A 60-day window has been left to negotiate issues around Iran's nuclear program, as well as some other thorny things that have been sticking this deal for a while. UK Prime Minister, meanwhile, Keir Starmer, announcing a ban on social media for children under 16.
Social media is making children unhappy. It's making it easier for bullies to harass and abuse them. And it could even be harming their mental health, exposing them to content that is dangerous, because that's what grabs the attention. It's designed to be addictive.
The ban will be implemented next spring and follows a similar type of ban that we have seen in Australia. Meanwhile, the U.S. government taking an unprecedented step to rein in artificial intelligence, ordering AI giant Anthropic to suspend access to its most advanced models to keep the technology safe from foreign nationals. Anthropic pushing back on the decision in a statement. Yeah, so this to me is a really interesting conundrum because on one hand, they've been coming out and saying we need more regulation. On the other hand, Annmarie, we have seen them really talking about the potential for this to impede their ability to do business.
They seem upset and annoyed with the administration after they've basically been begging out in the open, regulate us, regulate us, regulate us. Well, guess what? The Trump administration said we're putting on export controls. We think this is too dangerous. And now they have a problem with it. The political story has an incredible tidbit that Anthropic seems to be pushing out on. But the administration attempted to reach Dario Amodei, but they were told he was, quote, unavailable because he was attending a wellness retreat. One of the senior administration officials from the White House told Politico, spokesperson for Anthropic rejected this, saying it's absolutely false. I thought that was an interesting tidbit. You couldn't get a hold of your CEO because at a wellness retreat when this is potentially one of the most pivotal moments for this company.
Well, it also underscores this sense of unease right now because things are moving very quickly. A lot of money is being raised, and people are wondering exactly what it's being used for, whether it truly is dangerous and essential in equal parts both, or whether it is just an extreme capital raise, which is why people are watching SpaceX as something to potentially be a foreshadowing of what might come with Anthropic and OpenAI's IPOs later this year. SpaceX shares rising in the pre-market ahead of its first full day of trading. Space sector peers are also getting a boost from its record-breaking IPO. Joining us now, Rocket Lab President and CEO Peter Beck. Peter, thank you so much for being with us. You have been a public company for quite a while. You too are getting something of a boost from this. What do you think people have gotten wrong about investing in space until now when they're starting to pay attention?
Yeah, well, I think space is kind of an interesting opportunity. I mean, it's relatively new to the market, and we listed a few years ago now, and really are probably the only pure play space company at scale here on the public markets. So, it's great that when SpaceX lists, it brings a lot of eyeballs and interest and good research to the sector. So I think net it's it's a good thing for the whole space industry.
Does it make you concerned that the competitive draw from SpaceX will be overwhelming for Rocket Lab?
No, I don't think so. The reality is that, SpaceX is a space company, but it's also very much an AI company and a bunch of other things as well. But Rocket Lab is, a very, very squarely focused, pure play space company. And, as I said before, it's, I think it draws investors into the sector. And when they go looking, Rocket Lab is really the clear number two with respect to, launch frequency and those kinds of things. So no, I think I'm not too worried about that.
So do you find yourself complementary to SpaceX, or are you in direct competition with Elon Musk?
Oh, in some cases in direct competition, but also very complementary. We are an end-to-end space company, so we're the second most frequently launched rocket, US rocket in the world, behind SpaceX. So the rocket bit of it is competitive, but 2/3 of our business is building satellites and spacecraft and supplying merchant components to the rest of the space industry. So in that sense, not really a competitor at all.
How do you expect to fund growth in the future, given how expensive launches are?
Yeah, well, I mean, we're one of the things that we've been extremely good at over the years is we've been very, very capital efficient. So, Rocket Lab was born from a tiny little town at the very bottom of New Zealand. So it wasn't born with the backing of large capital resources. So we've always had to be super scrappy and very very efficient with our capital, and that continues. But luckily, it's saying that, over the 20 years of Rocket Lab's history, we've never struggled to raise the capital we need to be able to do the things that we also need to do. And, in the public markets, we're obviously that gave us access to a larger quantum of capital, and we've been able to grow, as you can see, very, very quickly in the last couple of years.
Peter, can you lay out what the business case is for the space economy? And this comes at a time when, as you mentioned, SpaceX has a lot of different competing factors. They have, of course, the question of launching into space, but also AI and also connectivity. Is it a national security issue? Is it getting to Mars? How do you see the space economy evolving as central to the economy here on Earth?
Well, there's a funny thing because, it's hidden infrastructure. So, nobody can really see the satellites apart from a whizzing star in the sky and a nice clear night. But the reality is that just about everybody's lives all the time is being influenced and touched by space. Whether you order a pizza and it arrives at your door, well, actually, that was all space enabled through the GPS constellation. And whether you're thinking about getting married on a day and you look at the weather and that's all coming from space. So space is kind of one of those things that it's like water in the pipes, that it's hidden infrastructure and people don't realize just, how much they use it. But in saying that, the growth in the industry is tremendous because it used to be just the domain of governments. Space is really well and truly now the domain for commercial enterprise. And that democratization of space is what you've seen just grow tremendously over the last sort of, few years.
Are you worried that right now the amount of money being raised will dampen enthusiasm for this sector over the next few years if there isn't the same kind of outperformance as some of the capital raises seem to be promising right now?
Yeah, well, I mean, that's a fact. I mean, it's all about execution at this point. And, once again, that's been something that we've been well rewarded for is execution. So, yeah, of course, if you raise large quantums of capital and then don't execute, then people don't look very favorably upon you. But I guess, for us, we've been able to hold that execution. So, and been rewarded. But, it is a risk in any fast growing sector. And there's always people that promise a lot and might not be able to deliver.
Peter, how far are we away from real data centers in space?
Well, there's a few technical issues to solve, but the physics is sound. It can be done. I'm not really worried about the technical issues there. I'm more interested in the pure economics of it all, because if you think about data centers, it requires a couple of major things to happen. Reduction in launch costs and scaling of a number of technologies. And that's going to be in direct competition to, the cost of electricity down here on Earth. So, I think, I don't think it's a sure thing that all data centers are moving to space. I think there absolutely will be some for strategic and defense reasons. But I think we're also, it's a bit of a bake-off between, how quickly can those, those orders of magnitude and change and cost reductions occur in space versus down here on Earth.
Peter Beck of Rocket Lab, thank you so much for being with us. That is the Rocket Lab president and CEO as we look at a SpaceX IPO that seems to be getting enthusiasm in post-market trading. That is key question. How much is this a promise to create infrastructure that might be above and beyond the sort of space economy that, as Peter said, is like water in how we operate?
Yeah, he says it's basically so much of what we already do now is basically reliant on the infrastructure we have in space. When it comes to data centers, though, I know you've been interested in this. Maybe it was the tone of my question. He's like, no, for sure, it's real. But for him, it's about when it actually could be profitable and make sense to start doing that in space. But that is the path. That is the direction of travel right now.
Yeah, that's certainly something that Elon Musk has raised many times over. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump urging Israel to stop its attacks on Lebanon and saying there should be no more strikes by either side, including Hezbollah. Trump saying this could be the beginning of a long and beautiful peace. Switzerland has rejected a proposal to cap its population at 10 million people as concerns over economic damage outweigh worries over immigration. In a national ballot on Sunday, 55% of voters opposed the measure, 45% backed it. President Donald Trump marking his 80th birthday Sunday by hailing an agreement to end the war in Iran. The announcement coming hours before a birthday celebration with a UFC fight on the White House South Lawn. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. You weren't at the UFC fight.
The spectacle, the brawl on the South Lawn, I was not in attendance for that. I chose the Knicks.
It's just the week of sports, really, whether it is the Knicks, the World Cup, or the UFC fight. Up next, Fed Chair Kevin Warsh on deck.
The Fed clearly has a pretty complicated dynamic that it's facing.
You do need the Fed
to turn away from this easing bias.
Most Fed officials, of course, are going to be fine leaving rates as they are.
The safest thing the Federal Reserve can do politically and also economically, I think, is just to do nothing.
Leslie Falconio, UBS, joining next amid a week of central bank decisions. It's not just the U.S., it's also England, it's also Australia, it's also the Bank of Japan and beyond. This is Bloomberg Surveillance. Last week, it could have gone either way, and a lot of people were pretty skeptical of some of the discussions of a truce. Today, not so much. You're seeing stocks around the world rally in the face of an expected truce to be signed on Friday between the U.S. and Iran. U.S. equities up 1.5%, 1.25% now on S&P futures. NASDAQ up 2%. Russell 2000 up 1.5%, really coming from the space in yields, where you can see yields falling across the board, most notably at the front end of the yield curve ahead of that Fed meeting on Wednesday, down almost 5 basis points to 4.04%, giving some reprieve to Kevin Warsh as he steps to the podium for his first FOMC meeting press conference. And this is all really predicated off the move in oil. Oil prices plunging more than 5% around the world. WTI down 5.25%, $80.41, the lowest levels going back to the beginning of March. A real question here for how central banks are going to look at this at a time where inflationary inputs are coming from myriad places. Under surveillance this morning, Fed Chair Kevin Warsh on deck.
The Fed clearly has a pretty complicated dynamic that it's facing.
My gut is that the new Fed chair, what they'll try to do is do no harm in June.
You do need the Fed to turn away from this easing bias.
Most Fed officials, of course, are going to be fine leaving rates as they are.
The safest thing the Federal Reserve can do politically and also economically, I think, is just to do nothing.
Here's the latest. Fed Chair Kevin Warsh gearing up for his first policy meeting with markets, expecting the central bank to hold rates steady. Leslie Falconio of UBS writing, we expect the June meeting to include removal of the easing bias. We think the Fed is likely to turn more hawkish in the near term. Leslie joins us now for more. Leslie, great to see you, and we will get into it in just a minute. What form do you think this press conference is going to come in? Do you think that it will be the typical display and explanation of the deliberations, or will it feel different in a new Warsh era?
I'm not sure it's necessarily going to feel different per se. I mean, Warsh has to really focus on the power of persuasion. But I think in this meeting, you have sort of that, emphasis on most, if not all committee members believe this is they're going to remove the easing bias. They're obviously not going to cut. They're going to keep the higher for longer. And even those that are more hawkish members like Hammack, I don't think no one's going to say, okay, we should be hiking right now. So that hawkish outlook is really just because they're going to remove the easing bias. They're probably going to take out the 2026 cut. But our expectation is that the next move is still a cut and not a hike. We're just pushing that out into 2027.
Leslie, do you think that the drop in oil prices and the potential truce between Iran and the U.S. will materially lift the desire from markets to see a hawkish tilt from this Federal Reserve?
Well, what's interesting about that, Lisa, is that if you look at even prior to this agreement, right, we had oil falling, inflation expectations were coming down, both in the long end and in the short end. But even as oil fell, 2-year yields were still rising. And they were still rising because the market was pricing in that almost 100% chance of a hike in December 2026. Now, what's happening now is oil prices are coming down, but the market's removing those hikes now. And because of that, the 2-year yield is coming down. So we can't say with certainty, what's going to happen with this agreement because we don't have enough details yet. But one thing that the market is pricing in today is that it's taking out those hikes. And because that yields are coming down, more than even what you're seeing in the decline in oil, because, again, those inflation expectations were coming down prior to the agreement.
So based on what we hear from the White House and Iran and also what the market is telling you, do you just think they're on hold for this year?
I do. I do think they're on hold for this year. I mean, unless there's some, fat tail event that we're not seeing. But, we just don't see that. I mean, growth is obviously much stronger than what people expected. I mean, never heard the words resilient and uncertainty so many times in the same sentence as we have these past 3 months. But listen, growth, it has been resilient, and so has the consumer. You're looking at 2.6% in real for the second quarter. We have retail sales this week, which is supposed to be above consensus. So that growth component, is hanging in there. But the issue is how that labor market really starts to play out. And yes, we saw a strong number, but you can't take one number with complete certainty. So I do think they're just going to sit back, exercise that option that they have and just sort of wait and see and have the data come in before they shift, probably in the first to second quarter of 2027.
Do you think Kevin Warsh just sits back and doesn't decide to play connect the dots and decides to not put a dot on the plot?
Yeah, that's a great question. And actually, I'm not sure because there's two things to that. One, it wouldn't be unprecedented, if he didn't. And if he didn't, he's sort of standing by his conviction that he doesn't believe in forward guidance. But again, at your first meeting to not sort of, show your opinion in those dots, I mean, what Warsh has to worry about is a power of persuasion, right? So to not put a dot in there, I don't think would necessarily be the best move. So honestly, I don't know. I think that he does. But unless he really wants to stick to his conviction regarding forward guidance or the lack of forward guidance he wants to see going forward, and he simply steps back.
I love it. To dot or not to dot, and the idea of will he put his dot on that plot?
Well, it would be a little scandalous, almost to Leslie's point. He'll be making a real statement his first meeting, deciding to not put a dot there. And then what does that say to the rest of the committee when he's trying to persuade them towards how he thinks about the world and the economy right now?
Leslie, we were talking about how it's not just the Federal Reserve. We're getting meetings from the Reserve Bank of Australia. We're getting the Bank of Japan meeting, potentially to hike rates. That's what the market is expecting. You have the Bank of England. You have the Riksbank. You have a whole host of different other central bankers that have to make a decision. How much does Kevin Warsh set the tone for them?
Well, listen, I think that we've obviously seen, divergence come to convergence, right? Because, if we go back to February for the U.S., we were actually on more of a cutting cycle while everyone was still sort of like in that hiking path, given that they focus, especially in Europe, on that one mandate, which is price stability. But now you're seeing a bit more convergence into how people are thinking. I think that it's expected that they, as you mentioned, that the BOJ, hikes, same with the BOE. I think going forward, what's going to be interesting is to see how much, pass through these supply shocks actually have. If these are not demand driven, so we really need to see what the input will be, and if in fact inflation does stay that much higher for longer, even though it's not expected and it's just supposed to pass through.
Does it concern you how strong you've seen capital markets in the face of higher interest rates, higher oil prices, and a lot of uncertainty?
It's incredible how little the spreads have moved in both high quality, say, agency MBS or IG, and even in high yield. You still have a lot of dispersion in the high yield market, but they have really stayed in a very tight range. Now, granted, we have that, we talk about that wealth effect and that compounding wealth effect that we've seen since 2022. We have over $8 trillion of cash on the sidelines, and the yields are very, very high, right? This is a yield-driven investment type of environment. This is not a risk premium type of drive. So I'm surprised how well that they have stayed sort of contained, but financial conditions remain loose. The capital markets remain open. We're still seeing, growth do well as earnings. But I do get concerned a little bit, given the fact that right now people are really investing for the yield and not necessarily what they're being compensated for.
Leslie Falconio of UBS, thank you so much for being with us. Ahead of a huge week for the bond market, given what we're going to be getting from central banks around the world, most notably Kevin Warsh, and a lot of the enthusiasm, at least in the bond market today, with yields down 4 basis points to the front end of the yield curve, comes from what's happening in the oil space at a time when this market is cheering a potential truce between the U.S. and Iran. But clearly there's still some skepticism about what this actually means and how much oil volumes can get back to where they were before.
And there should be skepticism in terms of the deal, because we're hearing a little bit of different details from Iran than we are from the White House. And of course, we want to see the text after they sign it. We should see the release of the text. But the Iranians are saying that, yeah, the Strait of Hormuz will open, but then we're going to have a tolling system. They're demanding things that this White House has said were red lines. So potentially it's going to be a little bit messy down the road. Mike Wilson of Morgan Stanley was writing, expects some more choppiness in coming weeks, but reiterates that he thinks these markets could push higher.
Yeah, that's what we're seeing this morning, although really the enthusiasm still focused on the tech sector. Coming up in the next hour, Seth Carpenter of Morgan Stanley, Henrietta Treyz of Veda Partners, Noah Weisberger of BCA Research, and David Tinsley of the Bank of America Institute. From New York, this is Bloomberg Surveillance. Good morning.
Fed clearly has a pretty complicated dynamic that it's facing.
It's more and more apparent that we're not going to get a rate cut anytime soon. But I also don't think that we're going to hike very quickly either.
I think they're just on hold indefinitely. I think the hurdle to hike is a lot higher.
Cuts are off the table for the balance of the year.
Right now, looking through is looking as clear as mud.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks and bonds both rallying as the Iran and U.S. reach a truce. World leaders gathering in France to kick off the 52nd G7 summit. Oil prices, meanwhile, plunging, given a reprieve to a new Fed chair, Kevin Warsh, who takes the podium on Wednesday. This morning, it really is being driven by oil, with the WTI down more than 5%, on the idea that maybe, just maybe, the Strait of Hormuz will open back up.
And that's what's pushing these markets actually to rethink potentially hikes this year. And it's a gift really to Kevin Warsh as he begins his era at the Federal Reserve this week. Of course, there's a lot of excitement about potentially the Strait of Hormuz being opened, but the devil's going to be in the details. Already the Iranians are saying we'll have the 60 days, the Strait will be open, but then after that, we're going to have a tolling system with Oman. And then, of course, the nuclear negotiations begin. The JCPOA took 20 months. This is going to be very technical, and it's going to take a very long time. And potentially, this is where it's going to be messy, because there are still red lines that they do not agree on between the White House and Tehran.
This is a massive week for geopolitics and markets. If you take a look at what's coming up, you have the G7 meeting taking place in France. It's going to be for the next few days. You have a slew of central bank decisions. It's not just the Federal Reserve on Wednesday. It's the Bank of Japan, the Reserve Bank of Australia tomorrow or overnight, Bank of England, Swiss National Bank, Norges Bank, et cetera, et cetera. And then, of course, Fed Chair Kevin Warsh. You have economic data coming to the fore with jobless claims and retail sales. And then, of course, on Friday, you have the likely signing of these two deals. It is the confluence of all of these factors coming together and underscoring a real question, AMH, which is how much has the inflation in the system really come from the oil price versus other factors in the economy, such as the other part of the G7 meeting, which is the tech leaders that are all there.
Yeah, it's pretty incredible, the names that are going to be there. Most importantly, the Anthropic CEO, I believe, is going to be attending this G7 in France at a time where we are seeing very big export controls on two of their systems from this administration. So how the United States, how Europe, how the G7 collectively may work to regulate these AI models coming at a critical time before their massive potential IPOs on Wall Street.
Yeah, right now what you're seeing in markets is a lot of enthusiasm for a potential deal, but not as much as you might expect. This is a market that is curbing its enthusiasm for what this actually means before it sees more details. Also, because a lot's already been baked in, up about 1.25% for S&P futures. You can see dollar weakness across the board. The rest of the world getting a boost. Euro up about 0.4%, 116. 10-year yields lower by 4 basis points, 4.44% ahead of that Fed meeting. And crude leading the charge, down more than 5% with an 80 handle on WTI. The lowest levels really going back to the beginning of March. Can we reverse all of the gains from the conflict at a time where we still haven't seen oil truly flowing freely through the Strait of Hormuz? Coming up this hour, do not miss this. Seth Carpenter of Morgan Stanley with markets awaiting Kevin Warsh's first meeting as Fed chair. Henrietta Treyz of Veda Partners with the U.S. and Iran agreeing to halt the war in the Middle East. And Noah Weisberger of BCA Research warning that SpaceX's historic debut could spark some concerns for future IPOs. We begin this hour with stocks and bonds rising after an interim agreement between the U.S. and Iran was reached. The breakthrough coming ahead of Fed's June meeting, the first under new chair Kevin Warsh. Seth Carpenter of Morgan Stanley writing this: while the tariff impulse appears to be nearing completion, sustained disinflation ahead depends on the resolution of the conflict. We expect the Fed to hold rates unchanged. Seth joins us now here in studio, which is a wonderful thing. Hey, good morning.
Good morning.
So is this enough for you to think that the inflationary pressure is probably going to be on a downward trajectory, or is there something else at play here?
So probably. How's that for an economist answer?
Yes.
Look, the path to a Fed rate hike, in our view, was never going to be just about inflation, and absolutely not just about oil-driven inflation. So historically in the U.S., oil-driven inflation, it pushes up headline, but not that much typically pass through to core. This time could have been different. We'll still have to see how everything plays out. But we were thinking if the Fed was going to hike, it would be a combination of inflation, especially core inflation, staying sustained, staying above 3% or so, and the underlying momentum of the real side of the economy broadening out, firming up, keeping going. And if we look at, say, the last several jobs reports, something that we haven't been talking about so much with oil prices being front and center, they've shown that the fall in hiring bottomed out. Things are starting to pick up again. And so I think the real key here is going to be, where is that underlying strength in the economy? And is there more inflation momentum outside of oil prices? We know that the pass-through from tariffs has essentially run its course. That's going to be a disinflationary force. Is there actually that much more fundamental, broad-based inflationary pressure to overcome that tariff disinflation?
On a certain level, doesn't lower oil prices help the idea of broadening out and strength that could potentially feed some of the other parts of inflation that can make the Fed uneasy?
Well, I mean, it is a bit of a double-edged sword that way, because if consumers in general feel freer to spend, they have more disposable income to spend on everything but gasoline, then just maybe there's a bit more resilience then to that aggregate demand. So I think that's a real risk. We just have to see how all of this plays out. And I have to say that the agreement's been announced. We haven't seen things signed. We haven't seen the increase in the flow of oil actually happen yet. We haven't got to that critical point where there has to be an agreement on all the rest of the tricky details, as you were saying before. So I think it's too soon to have any conviction that we know exactly where things are going.
What would it take for you to have conviction? What do you want to hear out of this agreement where the two sides agree on?
Oh, well, I think I just want to see the actual flow of oil happen. And then I think there are a lot of questions that happen after that. What happens to the rebuilding of inventories around the world? If people were happy with their stock of inventories before this conflict started, are they going to look at that level and go, in case this ever happens again, we need to have an even bigger inventory, in which case you could see a much greater surge in demand once things start flowing? We'll be looking at natural gas. How long will it take for the flow of the supply of natural gas to filter out around the world? The rebuild of inventories in lots of places there, that's pretty seasonal, can be pushed off for a while. It can't be pushed off forever. And we know that there was some damage sustained to Qatari production. And so I think there is a question about where will the market settle out once we have a clearer idea of supply and demand coming together.
How do you expect the new Fed chair to talk about all of this?
Very cautiously. I don't think there is a lot for Kevin Warsh to get out of being overly definitive here. It is a very fluid situation, and so him acknowledging that, I think, makes it easier. He's been clear that too much forward guidance is probably not a good thing, and if ever that statement was true, it is right now, watching all the different paths come together. Coming into this year, we were pretty constructive on the underlying momentum of the economy, and then the whole discussion was overtaken by what was going on with oil markets. I think we really do need to have some really close focus on that underlying momentum before they can decide, is policy really in the right place?
It is Monday, which means it's Merger Monday. And it comes at a time where, despite some of the uncertainty, we've seen capital markets incredibly robust. Fox, the latest news, Fox is planning to buy Roku for $160 a share in a cash and stock deal. Goes on to say that Fox expects the deal to close in the first half of 2027, and Fox will retain, I believe, about a 73% control of the combined company. This comes after the SpaceX IPO. It comes ahead of a whole host of deals that people are expecting. You see bankers incredibly enthusiastic, talking about how this might be a record year, a banner year in all sorts of different areas. How much does that potentially affect the Federal Reserve in how they look at markets, how they look at financial conditions, how they look at whether they truly are restrictive?
I mean, I think that's a great question, and this could be part of the shift in personnel and thinking with Kevin Warsh as chair. I would say in standard academically trained economists, somebody like Ben Bernanke would look at everything that's going on with mergers and see that as a result of the economy and other things going on in the economy. Kevin spent a lot of time talking to investors, talking to people in markets, and so could think of that overall sentiment, that this wave of M&A and that sort of thing, as part of the sentiment that's going on that might be driving some of the momentum in the economy. I don't think it's going to be a watershed where it's sort of going to be all in one direction or the other, but it does come down to, at times like this, where you're trying to get the signal, tease out the signal of where the economy is going. Do you lean a little bit more on some data? Do you lean a little bit more on other data? I think that's part of what we need to learn as we see this turnover in leadership at the Fed.
How much is AI driving some of the inflationary impulse, given that they are able to raise trillions of dollars of capital and invest it in assets that seem to be endlessly increasing in prices?
I mean, I think there we're seeing lots of measurement questions coming up. There's this discussion of so-called chipflation, but even within that, the question, has the BLS always got things right between software chips in terms of the price indexes? I think the real key here for the inflationary side of things is more that overall momentum in the economy. It is undeniable how much CapEx spending there is going on from AI, and I think that's leading to things like more construction. That's leading to a lot of imports for the chips and things like that, but it is helping to sustain the momentum of the economy. And for me, the real staying power for the inflation isn't going to be our chips prices going up. It is going to be, is that momentum in the economy with a fairly low unemployment rate, is that the thing that's going to sort of keep inflation, core inflation, at 3% or higher?
Something I was thinking about this weekend, especially as a number of the tie-ups start coming to the fore and companies get bigger and bigger. Are more consolidated companies, bigger companies, good for the inflationary backdrop or bad for the inflationary backdrop? Do they have greater pricing power, or do they have greater efficiencies of scale that could potentially lower prices for consumer?
Yeah, I think all of the above could be true, and at different points of a business cycle. Right now, our sense is that we're getting back to a point where there's going to be a little bit more discipline with respect to the ability with all of those sorts of things, with pricing power. And so I think we are looking for some disinflationary pass-through over time, primarily as tariffs have run their course. But we think overall we're going to settle back down to a little bit more stable inflation.
Seth Carpenter, always wonderful to see you. Thank you so much for being with us this morning. Seth Carpenter there of Morgan Stanley. And as we were just mentioning, there is, of course, mergers on Mergers Monday. We have Fox buying Roku for $160 a share. The tie-up continuing with this trend that we've seen, which is media consolidation so far in 2026.
Yeah, and their streaming devices, of course, helped usher in the era of digital home entertainment. We did report on this on Friday, that they were looking to potentially sell to a bigger media company, and their shares were up. Fox is down this morning, but Roku shares rose as much as 24% on Friday. So the market certainly likes this in terms of what Roku is doing.
Yeah, right now we're seeing a whole host of other transactions being announced as well. It all comes amid a backdrop of strength in markets. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Senator Mitch McConnell was admitted to a hospital Sunday morning. According to a spokesperson for the senator, he is, quote, receiving excellent care. No details about his condition were made public. McConnell, 84 years old, will retire when his current term ends in January. A shake-up in the media space. Fox is buying streaming and devices company Roku for a deal valued at $160 per share. The deal values Roku around $22 billion. It's expected to close in the first half of 2027. President Donald Trump threatening 100% tariffs on French wine unless President Macron eliminates France's digital tax on U.S. tech giants, including Amazon, Apple and Meta. The threat coming ahead of this week's G7 summit in France. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, reaching a peace deal.
We just made a great settlement of the war with Iran. They've all approved the deal. Everybody's approved the deal. Now we'll get it finished up, and hopefully that'll be done.
Henrietta Treyz of Veda Partners joins next. This is Bloomberg Surveillance. Good morning. Enthusiasm this morning as there is a truce reached between the U.S. and Iran. You can see stocks and bonds rallying across the world with a sense that maybe the Strait of Hormuz actually will open. A lot of thorny details to get worked out. Nonetheless, the stated aim is to get the Strait of Hormuz back open as soon as Friday, up about 1.33% on the S&P ahead of the open. You've got dollar weakness. You've got euro strength, 116 up about 1/3%. And you can see yields plunging around the world, although off some of the earlier lows, down a little bit less than 4 basis points on the 10-year, 4.4%. And the whole reason why is because of the story in crude, where you see a 4.4% plunge in WTI down to $80.26. Under surveillance this morning, reaching a peace deal.
We just made a great settlement of the war with Iran. They've all approved the deal. Everybody's approved the deal. Now we'll get it finished up, and hopefully that'll be done. They will not have a nuclear weapon. They've agreed to that.
Here's the latest. The U.S. and Iran saying they have reached an interim agreement to reopen the Strait of Hormuz. President Trump stating that the strait would reopen effective on Friday. Bloomberg's Tyler Kendall joining us from Geneva ahead of the president's expected arrival for the G7 summit. Tyler, how much is this agreement overshadowing everything at the G7 this year?
Lisa, it's definitely dominating the conversation, and that is because, of course, the Strait of Hormuz impacts all of these allies that are gathering here in Europe. But we still have a lot of big questions, as you alluded to, on exactly how this deal is going to be implemented, though people familiar with the matter do tell Bloomberg News that Qatar is set to host both U.S. and Iranian delegations this week to try to hammer out the final details to get a potential signing ceremony over the line and done this Friday here in Switzerland. Broadly speaking, neither of the sides has released the finalized text of what is in this memorandum of understanding, but the contours we've been tracking at this point for weeks, including that the ceasefire will be extended by 60 days, and we would see the Strait of Hormuz and the U.S. lift its naval blockade prioritized. But when it comes to how Iran feels that its role is going to be in terms of the strait going forward, we had new reporting this morning from Iranian state media that the strait will remain toll-free for the first 60 days, but then Iran plans to impose some sort of fees related to navigation, environment, and insurance services. And then, Lisa, another big sticking point here is what is financial relief going to look like for Iran? A senior administration official who briefed us before we got here on the ground told us that those financial benefits would accrue over time, but it is based solely on whether or not Iran upholds its part of the deal. We need to see what that finalized memorandum of understanding really looks like.
Bloomberg's Tyler Kendall, thank you so much. And Annmarie, this has been a real question going forward. How much will some of the other countries be involved? Because one of the criticisms at the outset of the war was that the U.S. was operating in isolation or not necessarily in concert with them. This time around, how much is the truce involving some of the other nations at the G7?
Oh, a lot. I mean, a lot of these G7 countries, I mean, no one got a heads up, which was an issue that bothered European allies. Now, of course, they all want to see the Strait of Hormuz open, especially those in the United Kingdom and across continental Europe, because of how much higher they are dealing with energy prices. And they're saying there seems to be some willingness to go help the United States. For some countries, though, they're going to want to see more work being done on Israel and Lebanon as well. So this is the start of what is going to be a messy few months as they work out the details of this deal.
Yeah, pretty heated exchange between Bibi and President Trump over the weekend. Henrietta Treyz, a Veda partner, is writing the 60-day extension of the ceasefire with Iran is the last best chance for, quote, stimulus from Washington before the election. Henrietta joins us now. A more skeptical take, but this is what a lot of people are looking at in terms of the political backdrop and how that's influencing when this decision was being made. Why do you say the last chance at stimulus?
Yeah, first of all, investors are really looking for the president to do something to juice the consumer before the election. I get that question a lot. People are thinking outside the box. Are we going to get a payroll tax holiday? Are we going to get a gas tax suspension? And Congress left town last week, and they're not coming back until the 23rd. There are, by my count, 16 legislative days between now and the August recess. And effectively, we're then in the end of September. So if there's anything that's going to happen, we've run out of time for a reconciliation bill. There is no bipartisanship to be had, as I'm sure y'all are very aware. And so if you were going to do any kind of stimulus, it needed to be in a third reconciliation bill. And Senator McConnell and Senator Collins kicked that to the curb last week as well. So this is as good as it gets. You know, if crude stays down in the $80 range, that's great. But this is the most relief that consumers are going to see pre-election.
Speaker Mike Johnson also called on Republicans to act on Social Security reform before the midterms. What is going to be the midterm election for the Republicans? Because that's not exactly going to work.
No, that is not even remotely going to work. And also, you can't touch Social Security via reconciliation. So you need to get bipartisanship. And when I talk to either Democratic staff on Ways and Means or Republican staff in Senate Finance, they are actually unified in the view that nothing is going to happen. Whether that's housing, whether that's crypto, Social Security, another reconciliation bill, we've got what we're going to get.
When it comes to the Iran deal, potentially Congress would have to okay some of the lifting of these sanctions. And this goes back to what happened with the Obama era and the JCPOA. Do you see Congress giving a green light if this administration were to lift sanctions on Iran?
That's such a fascinating dynamic. Lindsey Graham is very adamant that Congress needs to approve whatever this deal is. But all I think of is the USMCA. There's also a very adamant view amongst Senator Wyden, ranking member of Senate Finance, that the president needs to go through Congress in order to reaffirm the USMCA or even to withdraw. And the administration totally disagrees. So when you speak with the trade negotiators in Canada or the trade negotiators in Mexico, they'll tell you that there's a disagreement between who they talk to on the Hill and the White House. And I think the takeaway from the last 18 months or whatever is the president is going to do what he wants to do, and he's not going to ask Congress for their approval of this deal. Yes, you will need it for sanctions relief, but they have other ways to get around it. You've seen them go to foreign nations and say, we'll unfreeze some assets that are held overseas. They'll find a workaround. I do not expect Congress to get to yes on any deal.
This is the reason why I find the attendance of the G7 meeting so interesting this year. It isn't just the G7 leaders. It is also Middle Eastern leaders that want to have influence over this deal in certain capacities. And it's also the leaders of technology companies, including Anthropic, that are discussing some of these issues that have been percolating to the fore with all of the leaders who are going to be in those rooms. What do you make of the recent crackdown on Anthropic in particular over in the UK on social media, and the fact that these leaders are going to be in that room over in France?
Well, it's just another opportunity for the EU and NATO nations to have a completely different view of how to tax United States tech companies, how to regulate United States tech companies, what they can have access to or not. And I think it kind of gets to the point you were making earlier, Annmarie, which is they get a say here. You're not doing this in a vacuum. The EU nations, NATO nations, they don't want to communicate with Iran and have the strait be closed and have to coordinate to get through the Strait of Hormuz. And that is what the United States has created. And with Anthropic and tech issues as well, these are parts of all the trade agreements as well, whether there's taxation possibilities, and that puts tariffs back front and center. And of course, July 23rd, we need to have that whole conversation all over again.
Specifically with Anthropic, do you think this is the first salvo in a true crackdown or a true enforcement push when it comes to the AI build-out from President Trump and this administration?
Yeah, I think we're just at the very start of AI regulation. Right now, the way I think about it is pre-election and post. Going between now and November 3rd, the United States public and therefore the political parties are just going to talk about affordability. Immediately thereafter, all the new surge of lawmakers, of which there are 63, I think, they are AI focused, they are regulation focused. They're going to start with the consumer and children and use that to carry a much heavier regulatory weight that I think will be the topic of the 2028 election.
Were you surprised on the export controls on Anthropic that we had over the weekend, given the fact that this administration, for the most part, wanted to let AI companies have intense competition and really let the sector rip?
It seems very extreme. I know that the industry is treating it as very extreme. When you have those late night, very muted details and no leaks, that's how you know, I think, that something very serious is going on. But Congress is going to want to weigh in there. They will not at all this summer and pre-election, but I think as soon as we get to November 4th, they're going to want all the information there.
Henrietta Treyz, thank you so much for being with us this morning. Henrietta Treyz of Veda Partners. And interesting, this regulation comes after Anthropic CEO Dario Amodei actually requested some regulation from Washington, D.C.
And he wanted guardrails with the DOD. So it's very interesting that now Anthropic is putting out statements that they're upset about it. There's a nuance to this as well. There is reporting that 2 days before the model's public release, the Amazon CEO raised concerns to the White House about the ability to bypass the model's guardrails. So as other people in the industry raising the alarm, raising their flag to the White House and saying this might be more dangerous than even you expect.
Yeah, the idea is that Mythos was on limited release to just a number of companies. Fable was released more widely, and people figured out a way to get around those safeguards that were put in place to have wider distribution of Fable 5. We'll be talking about this, plus SpaceX coming up. Noah Weisberger of BCA Research warning about that SpaceX IPO, saying it could spark some concerns for future deals. Plus, Yahira Anand with your morning movers. Fox Corp announcing plans to buy Roku. The consolidation in the media sector heating up. Fox shares lower by 12%. Well, it's been an on-again, off-again exercise when it comes to a deal between the U.S. and Iran. Headlines swaying markets one way or another. This morning feels different. And I think you can get that sense in the moves in equities, in the moves in bonds. Let's start with stocks. You could see a general enthusiasm, not necessarily a guns a-blazing, oh my goodness, this is really it, but a sense that, yes, there is resolution. And you could see this being led by the Kospi, which has been the biggest leader in times of volatility on the way up and on the way down. It closed up 5.2%. In the U.S., it also is those more highly beta-like stocks like the NASDAQ, up at 2.2% with enthusiasm around big tech. But you're seeing the broadening out, too, with the Russell 2000 and S&P futures up about 1.5%, the DAX up 1.4%. When you look into the bond space, you could see yields falling dramatically across the world. In the U.S., you could see yields lower by about 4 basis points on the front end to 4.04%. Ahead of that Fed meeting on Wednesday, Kevin Warsh getting perhaps a bit of a reprieve if they do believe that oil has been the main driver of inflation. And it really is all about oil. When you take a look at oil, it is down about 5% globally. You can see that on Brent, down 5.2%, WTI down 5.6%. We're talking about the lowest levels that we've seen, AMH, going back to early March.
And it's kind of crazy given the fact that at this moment, the Strait of Hormuz is still technically closed. What is interesting, though, is we have seen more vessels and product get out. On Friday, I was in Houston. Secretary Wright told me about 7 million barrels a day the administration thinks is getting out. The Chevron CEO is a little bit more conservative. He says he thinks it's more like 3 million barrels a day. And that was before the announcement of this deal. So this deal is not just signifying that the Strait of Hormuz is going to be open, but already we saw actual movement before that, which is why the markets are really welcoming all of this news.
And of course, we also have Merger Monday with a whole host of being deals announced. 2 hours away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. Well, we start off with SpaceX. Shares are rising nearly 5% in the pre-market as it heads into its first full trading session as a public company after its blockbuster debut. And it's getting a boost from some comments from Elon Musk saying that SpaceX could generate by 2031 $1 trillion in revenue. That would be a dramatic leap from the $19 billion in revenue it posted last year. And as you were mentioning, it is a risk-on mood market this morning after the U.S. and Iran said that they agreed to a deal to end the war. That is helping to fuel gains in the higher beta names in the market like Micron and SanDisk. Micron is up 8.2% now. And as you said, some Merger Monday deal news this morning. Fox is falling 13% in the pre-market, while Roku just started trading minutes ago. It is up 2.3% after being halted for this news that Fox has agreed to buy the streaming platform, and it will have a roughly $22 billion valuation. This gives Fox access to 100 million households. And as you mentioned earlier, it's the latest sign of media consolidation, with just last week the DOJ approving Paramount's deal to take over Warner Brothers. Lisa?
Thank you so much, Yahaira. On our radar this morning, the U.S. and Iran reaching an interim agreement to reopen the Strait of Hormuz and halt the war. Officials from both countries will meet in Switzerland this week to formally sign the deal, which is expected to happen on Friday. Meanwhile, top Anthropic personnel meeting with the White House after the Trump administration limited access to Mythos. The government ordering Anthropic to disable access after discovering it's possible to bypass the guardrails of the Fable 5 AI model, which is the one that was released more widely. And Elon Musk out with a bold prediction for SpaceX. The Tesla boss not only expecting his rocket company to bring in $1 trillion in revenue by 2030, but anticipating surpassing that figure by 2031. As a reference, SpaceX brought in just under $18 billion in revenue last year. A pretty high bar to cross, given how quickly he expects to ramp up.
Definitely. But this is an individual who people believe in him and he believes in himself. But look how different, for some context, where he thinks the revenue is going to be versus Goldman Sachs and Morgan Stanley. So Goldman had estimated SpaceX revenue would exceed $470 billion in 2030. Morgan Stanley projects $330 billion. This is according to a Wall Street Journal report earlier this month. And Elon Musk is like, absolutely not, $1 trillion.
$330 billion, $1 trillion. Staying with SpaceX, shares extending gains after Friday's blockbuster debut, seeing Elon Musk's company close to a valuation over $2 trillion, adding confidence in the AI boom. Mandeep Singh of Bloomberg Intelligence joining us now. Mandeep, what's your take on this in terms of the possibility to grow revenue?
Well, you have to really believe in the space economy to think that they can get to 1 trillion. And what I mean by that is not just, on the compute side, what they have done with Anthropic and Google, which has added, almost $26 billion in annual recurring revenue. But that's lower margin. For me, the most attractive part about SpaceX is, their ability to launch rockets and the Starship vision that they have laid out, where they could put almost 100 tons in terms of, the vehicle that they're launching into space and keep reusing it like we use, aircraft. So from that perspective, the vision is quite powerful, but they have to execute on that and show that orbital compute will be a reality. And that is what will get them to 1 trillion in revenue. It's not going to be XAI Grok or XAI rental, compute rental revenue. It has to be that Starship launch being successful and their ability to, put things into orbit where orbital compute will be a reality.
Who is SpaceX's biggest competitor? Is it Blue Origin or is it Amazon, Microsoft, Anthropic, and OpenAI?
I mean, on the model side, it's clearly, the companies that you mentioned. But in terms of the space launch, I think that's where they have real IP. They are far ahead of everyone else. And if they have laid out this vision of orbital compute, they've shown that with Starlink, that connectivity is a reality, the satellite connectivity, and they've been able to monetize it. It's just the orbital compute part, because it requires much higher payloads. You want to see whether they can actually launch 100 tons and that, vehicle is reusable and they can monetize it at a rate that, NVIDIA and all these companies are doing it with terrestrial data centers.
Mandeep Singh of Bloomberg Intelligence. Always love getting your insights, especially now at a time of unprecedented IPOs. Noah Weisberger of BCA Research writing, we expect the IPO wave to be a headwind to forward returns and multiple expansion, likely not a catalyst for a sustained bear market. Noah joins us now for more. Noah, great to see you again.
Thank you very much.
So let's start there. In terms of a headwind, why do you see it as a headwind, and why does the market not necessarily see it that way, at least not yet?
So at least not yet. There's a lot of other things going on today. In particular, all eyes on the bond market. In my view, like the June mini pullback, I think was a bond issue or an inflation issue. So let's put that aside. Over the longer term, what seems to be a really interesting push-pull relationship between the markets, multiples, and IPOs. The historical pattern is that the market rallies, multiples expand. That leads to a pickup in IPO activity. So even if we didn't know about OpenAI and Anthropic and SpaceX, we think IPO activity should be picking up anyway on the back of the market's own dynamic. But once the big IPO waves come to market, historically, that tends to then mute forward returns and mute forward multiple expansion. So that's a historical pattern that forms kind of the baseline for my own expectations. The hard part is that the current wave of IPOs, as we see it, is probably 1.5 or 2 times bigger than previous peaks. So that's a historical pattern, but we're kind of out of history.
Part of the reason why is because typically if you have big IPOs, it drains capital from other places. So people have to reallocate away from certain names. This time when we ask people about that, they say, well, there's just lots of cash. People can keep going into some of these names without having to sell some of the other tech gainers. What's your take on that?
So 2 thoughts there. One, from a supply-demand perspective. Right? At the end of the day, this is supply and demand for things. The things are shares of stocks. We've seen a bit of a reduction in the supply from other places. Buybacks, a little bit less than in the past, but they're still subtracting about 1.5% of market cap on an annualized basis. Net issuance is negative, so that side looks okay. Not nearly enough to offset the big supply we're seeing from the IPOs. But then in terms of the demand, the easiest demand to keep track of is on the passive side. So the people who have to follow an index, when the stocks get added to the index, they have to sell. And even for OpenAI, which is being added to a smaller index, we're talking about less than a percentage point of market cap and like a 1-to-1 relationship between what we can see in terms of the passive reallocation and the passive monthly inflows. So the passives are sucking up lots and lots of cash dollars, and that should help to mitigate some of that forced selling, if you will. So that doesn't seem to be a red issue, but that is kind of where this happens.
You think the broader risk is rotation when it comes to these massive IPOs?
Yeah, so that was the other, I think the big issue is that I think people do have, I thought your question was great about what is SpaceX, like who are its competitors?
All of the above, right?
All of the above. And certainly when we get to OpenAI and Anthropic, one of the things that we've been noting when we've been looking at the AI trade is that about a third of some of these hyperscalers, a third of their income is now other income, which is essentially their exposure to some of these pre-IPO names. So investors already own some of this exposure from a risk perspective. Do they want it in a pure play? Would they rather just own the stocks themselves? Do they want to own the correlation to it? And that, I think, would be interesting to see. Do you want the pure play or do you want the derivative?
How are you thinking about what the United States did in terms of the export controls on Anthropic over the weekend?
So I think that is beyond the IPO issue. I think that hints to where the political landscape is going. So we have a populist era that seems to be entrenched, whether it's a Republican administration or a Democratic administration in 2028. We have a sector that's in the middle of a super cycle. We have companies that are, the analogy to me is the integrateds in the railroad integrateds or oil integrateds a century ago that are generating great profits. So I think there will be ham-handed ways that politicians will look to rein that in.
If it's so dangerous and so good, they had to pull it back. Is that almost bullish for the Anthropic IPO?
So it does tell you there's some great models out there that get added. I think we're still learning how these add into software companies, how they get integrated into the system. And so we still think there's a runway, even for some of the popular parts of the market. I think some of the near-term dynamics maybe broaden that out, and there are some rotation risks, I think, from the IPOs themselves.
Just to build on Annmarie's point there is a theory that this actually is really good for Anthropic, in part because they don't have to spend as much money on these really intensive programmings and this really intensive large language models that eat up a lot of energy, and they can put it toward other things, let alone prevent others from potentially competing. How much are they looking to Washington for that type of guardrail to give them a leg up in the competitive dynamic, but also when it comes to just where to focus their energies, the idea of actually disseminating in a useful commercial way rather than some of the hopes and dreams about intelligence?
Right. I mean, I think that's an interesting pivot where, and we'll see when they come to market and they have to actually face quarterly reporting. I mean, I think that's the other element of the IPO cycle, which is it speaks to the quality of these companies that they want to face that scrutiny, but it does give them the ability to operate like not a hopes and dreams company, as you say, and maybe does that trim the multiple a little bit? I don't know. If you have a strong growth profile that's not, that's, I don't want to say slow and steady, that's high and steady, I think that attracts capital and attracts a multiple, which is where we are now.
Just want to finish with, aside from Knicks and World Cup discussions over the weekend, a lot of people were wondering who came into my orbit, what's the deal with SpaceX? Is it a bubble or is it the sign of an incredible future to come that we just aren't envisioning?
I mean, that's what the price to sales would tell you it is, right? I mean, it's like 95 times versus even the other expensive companies that are already in the index are much, much lower. It is exciting to speculate about that. I don't think I'll get to Mars in my lifetime, but, the one thing I will say is across his portfolio of companies, Elon Musk is able to really think in ways that didn't seem possible prior to him thinking it. How much are you willing to pay for it and how much vol do you attach to that? Those are hard questions that the market will answer for us now that we have it. Another one of his companies in the public.
Noah Weisberger, wonderful to see you. Thank you so much for being with us today. That's Noah Weisberger of BCA Research. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Former Federal Reserve Governor Stephen Myron returning to the private sector. Axios is reporting Myron is going to Hudson Bay Capital Management. He says he looks forward to helping clients navigate a, quote, dynamic economic environment. Steven Spielberg's Disclosure Day won the weekend box office. The movie grossed $44 million in ticket sales in the US and Canada. The film, about a cover-up by the US government of the fact that aliens have lived on Earth since at least 1947, ranks among Spielberg's best openings in history. The 2026 FIFA World Cup officially in full swing. The United States men's national team kicked off group play by defeating Paraguay 4-1. Elsewhere, Germany and Sweden delivered massive blowout wins, while Spain begins their quest this afternoon. That is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. And just a note, you can see that the World Cup games are really heating up, and Jonathan Ferro is off this week. Just want to point out correlation, not causation, but, that could be something one could infer.
It's very true, and Brazil played this weekend. But I don't even know why we're doing World Cup. It's just the start of World Cup. We should be basking in Nick's glory right now.
I think you are basking. There is quite a bit of basking going on.
I'm still
here.
on a high from San Antonio. It was just incredible.
You could feel it through the entire city. Up next, we're going to be talking maybe about the Knicks, but also consumers holding strong.
We only have a couple more months of savings with the consumer before you start to see that consumer start to break down. We're not talking about a very bearish consumer outlook. There are still elements of strength. We are not talking about a complete collapse.
David Tinsley of Bank of America Institute joins next. This is Bloomberg Surveillance. Good morning. The lift to markets has continued throughout the session. You could see enthusiasm for the possibility of oil once again flowing through the Strait of Hormuz. Although paring back just some of the earlier gains a touch, S&P futures up 1.33%. You could see the euro gaining versus the dollar. Dollar weakness pretty much across the board, except for maybe over in Japan, which is interesting ahead of the Bank of Japan meeting later tonight into tomorrow. And 10-year yields lower by about 2 basis points, taking back some of the declines that we had seen earlier, 4.46%. Oil prices still down more than 5%. You can see a New York crude WTI at $80.37. A question here about how much this will give a boost to the consumer under surveillance this morning. Consumers holding strong.
We only have a couple more months of savings with the consumer before you start to see that consumer start to break down. We're not talking about a very bearish consumer outlook. There are still elements of strength. We are not talking about a complete collapse. You're going to get more resistance going forward on passing through these additional price shocks to the consumer.
Here's the latest. A U.S.-Iran agreement to reopen the Strait of Hormuz set to further boost consumer outlook after sentiment rose last week for the first time in 3 months. The Bank of America Institute Consumer Checkpoint showing resilience despite the war, with total card spending rising 5.1% year over year in May, saying spending momentum is remarkably robust. Underlying spending remains firm across both goods and services. Joining us now is David Tinsley of the Bank of America Institute, who's been running the numbers. David, can you talk about just where the resilience is coming from that has been maintained throughout the entire conflict, even before this truce was reached?
Yeah, I mean, I think it's pretty remarkable the way the consumer has powered through this period of high gasoline prices. You know, when we look at our data, card spending, total card spending is up about 5%, but even leaving gas aside, it's close to 4%, multi-year highs. Within that, it's travel, it's restaurants, it's retail, electronics, for example, general merchandise. All of those areas are areas of overall strength, I think.
At the same time, David, you note that this is coming on cards, on other methods of borrowing. You're seeing the savings account dwindle quite considerably, and wages really haven't kept pace. How long can that continue?
Yeah, I mean, I think that's sort of a fair point. I mean, what we are seeing, and I think this is a promising sign, actually, is that lower and middle income households' wage growth has picked up in our data over the last couple of months. So lower income households in the Bank of America data was around 1.5% their wage growth a few months back. In March, it was up at 3.5%. So I think if that trend continues, which translates to a narrowing in the K shape between consumers, then I would be, relatively optimistic that for sure, as the savings come down a bit post refunds, there'll probably be a cooling in consumer momentum. But the degree of that, I would be, fairly optimistic on.
David, are you seeing consumers having to tap credit at the moment?
Well, that's the kind of headline, isn't it? But when we look at our data, the share of spending that's being done on credit as opposed to debit is pretty much bang in line where it was last year. And that's true across all income cohorts too. So, maybe just at the margin for some. So one of the things we note in the report is that the share of households who are only making the minimum payment on their credit cards, that's risen. But funnily enough, so has the share of households who are paying off the full balance every month. So it's a very kind of nuanced picture. Most people are fine, but that's not to say there isn't a little bit of stress in the tail, if you like.
So, David, where's the pushback coming from? I hear what you're saying, which sounds like a very resilient consumer. At the same time, every single survey or poll I look at shows a consumer that's frustrated right now.
Well, one of the things we see in our data is that for lower and middle income households, their spending growth is ahead of their wage growth. And that wasn't true last year. So they are feeling stretched. Right now, they've got the refund checks to draw upon. Potentially, they could put a little bit more on credit. So there is, I think they feel tension. And one of the ways that's translating into their spending choices is through, trade down, which we've discussed at length, trade down in groceries, trade down in restaurants, etc. But I think going, into sort of the second half of this year, and I suppose just to say the World Cup's a thing as well, isn't it? This will probably boost spending somewhat over the summer months. As we go through all that, then maybe at the end of this year we'll see a cooling. But I feel that the data is saying that slowing needn't be too abrupt.
David, you said something really important, which is that wage growth was starting to pick up, particularly at the lower end of the income sphere. Is it starting to catch up with inflation?
Yeah, I think that's probably true, just about. So our lower income wage growth is around about 3%, roughly where inflation is. Obviously, different households face different rates. Lower income households probably face, in all honesty, a slightly higher rate of inflation. But it is just about meaning that they're keeping their heads above water now in terms of price rises.
Does that signify to you that the worker is getting increasing leverage when it comes to negotiations at a time where people really are looking to that as a tell of how pervasive some of the inflationary forces could become?
Well, one of the very tricky things right now is whether this apparent strength we've seen in the labour market over the last few months, in payrolls, also in our own payrolls estimate, has been rising very strongly. When we look at that data, it does seem to be focused more on the lower income end, which kind of complete the story of a sort of lower income recovery. But at least some of that hiring seems likely to be related to the World Cup, for example. A lot of it's in leisure and hospitality, etc. So I think critical is going to be how the labour market shapes up post-World Cup and whether we see some pullback in terms of the very strong jobs growth we've seen in the data.
David Tinsley of the Bank of America Institute, thank you so much for being with us. And I will just make a note that we actually are losing staff as a result of the World Cup. Jonathan Ferro out this week, potentially to go watch. He will be coming back next week, so it's not so we're losing him permanently.
But you know what? A viewer writes in. You know what else is this week? The U.S. Open, the golf.
Ooh, that's
Shinnecock, I believe, in the Hamptons.
It's
so where is Jonathan Ferro this week? It might not be football, as he would say. It could be the golf, which he loves.
Burning minds want to know. Look, this is really the ultimate question for so many different people, which is how much can wages start to pick up to allow people to absorb the costs more easily? You're already seeing some of that trading down, and clearly it's a concern. It's been coming out in both polls as well as consumer sentiment.
Yeah, you see a consumer that, frankly, is just cranky. They do not want to keep paying these higher prices. And how many times have we been on this show and people said, well, they have the tax refunds? I feel like the tax refunds have been spent multiple times since January of this year.
One person who's not cranky is Annmarie Hordern, who is really still basking in the glow. Coming up in the next hour, Liz Thomas of SoFi, Dave Dase of Goldman Sachs, Kathy Bostjancic of Nationwide, and Greg Boutle of BNP Paribas. This is Bloomberg Surveillance. Good morning.
We're at the beginning of a new frontier here.
This is a broad-based demand for capital.
SpaceX orbital AI infrastructure is a venture capital style bet that's being treated as index fund mature and certain.
The Musk premium is extremely significant. It's critical.
Speculation is alive and well. Expectations are very high, and this really sets up the stage for disappointment.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks and bonds rallying as the Iran and U.S. reach a truce. World leaders gathering in France to kick off the 52nd G7 summit, and oil prices plunging, giving a reprieve to a new Fed chair, Kevin Warsh. Everyone's in a good mood, including Annmarie Hordern in her blue and orange, as people take a look at the possibility that maybe, after months, we can put this conflict to bed.
Yeah, putting the conflict potentially to bed, at least getting an extension of the 60-day ceasefire. And Iran is agreeing that the Strait of Hormuz will open. The details after that are going to be incredibly challenging. Already Iran is saying there's going to be some sort of tolling that will happen between the Iranian and Omanis. That is not going to be acceptable to this White House or Arab allies. And on top of that, what happens with sanctions reliefs? What happens to oil waivers? Will frozen assets be lifted? What happens to nuclear? Will there be a reconstruction program that Iran is calling for? This is where it's going to be a little bit more messy because you have red lines that just don't align between Tehran and Washington.
And honestly, I think markets are sniffing this out to some degree, given that it isn't necessarily all clear. You aren't necessarily seeing the broadening out and the outperformance coming from pockets that you would expect, say, Germany or France and those markets there. You are seeing the outperformance continue from big tech following the SpaceX IPO. And as you do get these G7 meetings taking place with the likes of Dario Amodei and other tech leaders joining them to discuss what could potentially happen, a question here about what their role will be, given that we've seen a bit of a percolation of regulation coming to the fore.
Oh, a massive percolation in terms of export controls that the administration put on Anthropic models because they are concerned with this getting into the hands of adversaries and potentially some customers that would use it negatively. I think part of this G7 and why the French president invited these tech leaders because they want to be educated. And at the same time, they want to get on the same page with the United States on how they're going to deal with these AI companies.
This is going to be a massive week because you have, of course, G7 going on in France. You have the World Cup ongoing. You have Annmarie still basking in the Knicks win.
We have a parade on Thursday.
Yeah, we have a parade
New York
on
will
Thursday.
Be celebrating.
Putting that aside, we also, of course, have a slew of central bank decisions really headed off by the Fed on Wednesday. Kevin Warsh, it is the first time as Fed chair that he will be at this meeting and setting the tone. We also get decisions from the Riksbank, the Bank of Japan, Reserve Bank of Australia, BOE, SNB, Norges Bank, etc. At the same time, we get some data. We get initial jobless claims as well as retail sales. And then on Friday, we've got this deal signing. It all comes together with this confluence of how do central bankers respond to potentially inflationary pressures from oil abating, but potentially inflationary pressures from other places picking back up.
Well, I think for Kevin Warsh, and you nailed it, this is kind of a gift for him. He's going to be able to say, well, we're waiting for the administration to sign this deal, and you've already seen how oil prices have dropped sharply because of this. We are $80 a barrel for WTI. That is a lot lower where people would have thought. I think also something else potentially helping the Fed, and this is what I spoke with Secretary Wright with on Friday in Houston and the Chevron CEO Mike Wirth, there are more barrels getting through the Strait of Hormuz right now. Some vessels are turning off their transponders. Clearly, the United States is helping transport some of these, protectively helping them transport out of the Strait of Hormuz and through the Gulf of Oman. So you are seeing potentially that story become a lot easier for the Fed to say, at the moment, we're going to be on hold and we can look through this in the future.
Right now, people are in a good mood, at least to base it on where the markets are trading this morning. People, meaning Annmarie, up 1.3% on the S&P futures. NASDAQ futures up 2.2% with an interesting follow-on from SpaceX. Those shares flying. Russell 2000 up 1.75% following the bond market rally that you're seeing around the world. Yields lower as oil prices come in, particularly at the front end of the yield curve. As Annmarie was saying, really taking pressure off Kevin Warsh and some of the other central bankers. 4.05% on the 2-year. When you take a look at what we're seeing in the oil space, you are seeing some of the lowest levels on oil prices that we've seen going back to the beginning of March before the conflict really kicked off, with New York crude WTI trading with an 80 handle. Coming up this hour, Liz Thomas of SoFi as a global relief rally lifts markets. David Dase of Goldman Sachs on investing in the booming sports sector. Maybe we'll talk about some of the sports that have been dominating the weekend. And Kathy Bostjancic of Nationwide looking ahead to Fed Chair Kevin Warsh's first rate decision. We begin this hour with stocks gaining, oil falling as the U.S. and Iran agree to halt hostilities. Liz Thomas of SoFi writing this: we are still in a bull market. Investors are still hungry for growth opportunities, and companies are still willing to spend to create it. Rotations can be healthy, but they are rarely smooth. Liz joins us now for more. Liz, great to see you. Thank you for being with us. Let's start with the concept of lower oil prices and whether that portends some sort of rotation into the areas that haven't been gaining, i.e., everything other than tech, or whether this really just causes people to double down on the AI trade.
Well, I think it supports the rotation that we started to see on or around June 2nd, when we started to see the pullback in many of those big tech sectors, semiconductors in particular, and a lot of the stocks that had done so well in the 3 to 4 weeks leading up to that point. So I think lower oil prices and lower inflation expectations, with emphasis on the word expectations, is going to fuel, hopefully, more of a rotation into some other places. That being said, obviously the SpaceX IPO and the excitement that we saw around it, the hype that we saw around it, and frankly, the success of it on Friday is driving a lot of a rebound in tech stocks today. And what we'll probably see for the remainder of the week, barring any big surprises from the Federal Reserve.
Liz, are you surprised that we aren't seeing a greater rally on the heels of the truce that was announced between Iran and the U.S.?
Well, I don't think we've really had a chance yet. So it's possible that once the market opens today, and if we get confirmation that this will actually reopen the Strait of Hormuz, because we still have to wait a few days to see that that's going to happen, I think towards the end of this week and even leading up to it, if things continue to fall in place, we will see relief in certain areas that have been struck by inflation fears, and we'll probably start to hear commentary about businesses being less concerned about inflation. But I want to make a point that I alluded to in the first statement, is that the Federal Reserve is concerned with inflation expectations. Yes, of course, they look at the data as it's reported, which is backward looking, but they are also very concerned with expectations and making sure that those expectations remain anchored. So oil prices coming down certainly helps that cause and makes Kevin Warsh's job on Wednesday slightly easier than it was without this peace deal.
Yeah, it brings down the temperature just a little bit. At the same time, Maersk is saying at this stage no changes to their operations. Then the announced agreement is welcome, but they need to wait before they start moving, some of these vessels through. What is going to be for you the most important aspect of this deal to learn, and you think potentially could be very bullish for the market?
Well, when you look at what's most important, I think the obvious answer here is that the strait is reopened, that oil starts to move closer to a volume that it was pre-war. Yes, there have been some more barrels moving through the strait, but not nearly what the world needs. And there have been now 15 weeks of an oil supply disruption. It doesn't necessarily start flowing and reach its final destination very quickly. So that's why I'm sort of hedging the commentary, because it's going to take a while for that supply to come back online. And there will still undoubtedly be some disruption in prices, some disruption in operations for certain businesses, Maersk being an example of a business that might be disrupted by that, at least in a short-term period. So I think companies are being careful to hedge their commentary as well and make sure that they're allowing for what still could last as a price disruption for a couple months to come.
As the market, though, starts to put this behind us, and they almost have been for a few weeks now, what's going to be the biggest risk for you going into year end?
The biggest risk here is that we hear some sort of commentary from tech companies that they're slowing down CapEx. I don't see that coming as a likely scenario, but regardless of a rotation in the market and cyclicality that might return, this market is still very dependent on the AI trade, and particularly now at this phase, on the AI trade proving productivity, proving earnings, and proving that it can start to reach into other sectors and increase productivity there. So not just benefiting the tech sector. And that's one of the reasons I've been talking about healthcare, this still being a good entry point. Healthcare has seen decent returns since that June 2nd time that I talked about, where technology started to pull back. But I do think healthcare can do well through the end of the year, looking forward to that productivity gain. And it serves as a defensive growth sector, particularly in a time when midterm elections are coming up.
Liz, how concerned would you be if there was a hawkish shift at the Fed this week on Wednesday, despite the expectation that Kevin Warsh will try to take the most dovish approach to maybe dropping the easing bias?
Well, with one hike already priced into the market, I don't think that there would be too much of an overreaction in the market. I think that the Fed will do what they can to leave flexibility in the statements, much like Jerome Powell did on different occasions, trying to leave the door open to we will react however we need to given the data. I think there's actually a higher chance that Kevin Warsh has already been expected to say something hawkish, but he comes out and actually says a few things that are more dovish. The other thing that I would be listening for on Wednesday is for him to make note of the fact that it's not just interest rate policy that they plan to affect. He has been very clear that he wants the Fed balance sheet to be lower, and there is a chance that maybe they use some of those tools rather than interest rates to affect the market. So that may even be seen as a dovish comment if people start to price out the idea of a rate hike.
Liz Thomas of SoFi, thank you so much for being with us this morning ahead of a very busy week. Citigroup's Andrew Hollenhorst dropping this note on the issue just as we were talking, saying this: the planned reopening of the Strait of Hormuz and ensuing drop in oil prices will remove upside risk to inflation from energy prices as a reason to pursue more hawkish Fed policy. Together with last week's cool core CPI reading, Chair Warsh can make a dovish case at this week's FOMC, leaving eventual rate cuts still on the table.
If it's a dovish case, does that mean that basically they keep the easing bias? I mean, is that basically what Citi would think, that they were able, given what's going on, could they keep the easing bias? I'm not sure everyone else on the FOMC is there.
Liz's point, though, is an interesting one. We already have one rate hike baked into the market through the end of this year. Potentially, the trade here could be more on the dovish side if there isn't necessarily some sort of support on the committee to get a sense that a rate hike truly is on the table for later in 2026. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The U.S. and Iran reaching an interim agreement to end the war and reopen the Strait of Hormuz. Officials from the two countries will meet in Switzerland to formally sign the agreement Friday, setting the stage for then 60 days of negotiations on the fate of Tehran's nuclear program. Target naming Isaac Mizrahi as its first creative director at large. The company says Mizrahi will advise its design teams, mentor young talent, and identify new partnerships. The New York Knicks are NBA champions. The city holding its first ever ticker tape parade for the team this Thursday. Mayor Zoran Mamdani saying he'll hold a ceremony at City Hall where his administration will present the team with keys to the city. And that is your Bloomberg Brief. Lisa.
They already have the keys to the city right now. Vonnie, thank you so much. Okay, Annmarie, go ahead.
It's just amazing. I think there's one stat we didn't talk about this morning, which was Jalen Brunson's 15 points in the fourth quarter, which I saw live in San Antonio, which was the 6th borough on Saturday night. And the only other individual that's ever done this, according to ESPN, was in 1998, and that was Michael Jordan. And obviously everyone knows he's the greatest of all time. So Jalen Brunson is an absolute New York hero. And he did it. He did what he said he was going to do.
Yeah.
Against everyone saying he couldn't do it. And there was one New York Knicks radio broadcaster that had this line that honestly grown men were crying at. No lead is too big, no guard too small.
And right now, a lot of people are cheering the legacy that Jalen Brunson left with his father as well. Up next, we're going to be talking about this more and the investment opportunity behind sports, because people are willing to pay a lot to come together and to have these experiencing. We're going to have the morning calls plus Dave Dase of Goldman Sachs on investing in the sports sector, given what we saw over the weekend. Not just the Knicks, also we have the World Cup, also we have the U.S. Open, all of that coming up next. This is Bloomberg.
Space is kind of an interesting opportunity. It's great that when SpaceX lists, it brings a lot of eyeballs and interest and good research to the sector. That used to be just the domain of governments. You know, space is really well and truly now the domain for commercial enterprise. And that democratization of space is what you've seen just grow tremendously.
That was the Rocket Lab president and CEO Peter Beck after the monster IPO, a record allowing SpaceX to become nearly a $2 trillion company. Another company making news this morning in the tech sphere is NVIDIA, coming out with its first bond sale, first high-grade bond offering going back 5 years to 2021. The shares are off some of the earlier highs. They had been up significantly more. Now they're up 1.6%. They're planning to sell this particular series of bonds in 7 tranches with maturities spanning 2 to 30 years. This according to a person with knowledge of the matter. It follows a slew of different bond offerings from the likes of Alphabet and Amazon as everyone tries to load up and build out to try to win in this race for AI. Time now for the morning calls. First up, KeyBank upgrading Rocket Lab to overweight, seeing compelling opportunities across the rapidly growing space sector. Next up, Citi raising its price target on Texas Instruments to $345 from $280, citing recent price increases and tailwinds from data center demand. Those shares up 3.5%. And finally, Needham lifting its price target on Roku to $170, seeing its acquisition by Fox as an opportunity to create more value from Roku's platform across a broader system of devices. Those shares up 1.75%, had already rallied ahead of this on rumors of deals last week. Meanwhile, we are all Knicks this morning. The New York Knicks winning their first NBA title in 53 years, helping send shares of MSG Sports to record highs as the team closes in on a $10 billion valuation. Dave Dase, global co-head of the sports franchise and investment banking at Goldman Sachs, writing, the sports market continues to grow and the subsequent liquidity is having a positive effect on teams and leagues. Dave joins us now for more. Dave, wonderful to see you. I'm sure it was a big weekend for you as everybody focused on their various sport of choice. I'm curious how much you've seen the investing world change around sports over the past couple of years.
It's certainly been very dynamic. And if you want to really truly understand what sports are like, just look at the Knicks this weekend. Look at what happened with the Hurricanes last night. Just the sense of community, the sense of engagement, the ability to really bring a city together, bring a region together. It's very, very powerful. And obviously with the World Cup going on, we're going to see more of that over the course of the next several weeks here. So it's a great indication of the excitement in terms of what's coming together. In terms of the evolution of sports, it's changed very dramatically over the course of the last several years. We'll talk a bit about institutional capital, which is coming into it. But fundamentally, sports is an asset class. We believe it's $1 trillion plus asset class. It continues to be very, very dynamic. It continues to grow at a very accelerated rate. And we're seeing increasing pockets of capital that really want to invest in the sector.
You've seen family offices, you've seen others that have IPO'd and potentially have a lot of cash. You have a lot of potential out there for people to get in on this. You talk about there has been institutional adoption, particularly from people looking for an inflation hedge. Can you explain how sports is an inflation hedge?
Fundamentally, as you're right, we're seeing a lot of interest across really three different groups of buyers. But you can aggregate audience. Media rights are growing pretty dramatically, given that sense. It's something people want to be part of. And so, again, it's back to this community. You have pricing leverage, you have the ability to really grow. And for the North American leagues and the many leagues around the world, you do have some level of governance. In essence, salary cap in place where you have some level of control in terms of the costs, but there are many, many different ways you can grow from a revenue perspective. And so we are seeing that as an inflation hedge. You're also hearing this hedge against AI and the ability to, in essence, right? It's real, it's live, it's in person, it's dynamic, it's direct to consumer. And so all these ways that it's not being disintermediated by AI and what we're seeing in so many other sectors of the economy.
If you have an interest to invest in sports, how do you know when to time it?
Well, timing can be a little bit, challenging because they're not for sale all the time. We think about sports across three different fundamental verticals. So it's teams and leagues, it's sports adjacencies, which is all the dynamics of companies that grow up around sports. So think gaming, ticketing, data analytics businesses, live events businesses, talent agencies, apparel companies, et cetera. So that flywheel. And then infrastructure. So infrastructure is really stadiums, arenas, and all the infrastructure that goes around it. And we're seeing strong interest from institutional capital across all three of those different verticals. In terms of the teams, there are multiple ways to get in, and we're seeing really three different pockets of capital that have strong interest. So your typical sports owners, the control owners, the multi-billionaires, the people who can really buy and control those teams. Family offices, these multi-billion-dollar family offices around the globe, have a strong interest in sports, both from just an interest and passion in the team, but you're also from an asset class allocation in terms of these are very, very long duration assets. You talked a lot about the Knicks, but many of these teams have been around 50, 75, 100 years. They'll be around 75, 100 years from now. And so the duration of the investment lines up really well. And then institutional capital, more traditional private equity, we're seeing a lot of structured capital come into the sector. And then we're also seeing, in essence, insurance capital, sovereign wealth fund capital. Again, some of this longer duration capital really has an interest in terms of finding its way into the sector.
Well, I'm excited about the Knicks, not just because I was at the Game 5 on Saturday where they won the championship. I heard Dolan speak. Do you think now's the time, potentially, given how Madison Square Garden is trading as a stock, given the fact it's the first championship in 53 years, do you think he would actually sell even maybe a minority stake?
I think it's really hard to comment on any of that, but fundamentally the valuation in the intro you talked about how it spiked up. That's been one of the interesting things is the public companies around sports have traditionally traded at significant discounts to a private market type valuation. That gap has obviously narrowed pretty dramatically with respect to the Knicks and the Rangers. But look, these are really unique situations. There've been millions of Knicks fans for many, many years. I think coming on the back of this championship, the Knicks fans, right, there will be millions more Knicks fans. And as we're first starting to get into this direct-to-consumer opportunity set and better data and the ability to manage these teams more as professional-type businesses, there's significant upside for all these franchises. And certainly franchises in these big major cities that can not only be city brands, regional brands, national brands, but truly global brands. I think there continues to be a lot of upside, and that's why you're seeing a lot of this capital have an interest in terms of trying to get into the sector.
Dave, I'd love your thought on pricing of tickets. We've talked a lot about that on our show, whether it's the Knicks tickets that got pretty intense in terms of pricing or the World Cup ticket pricing. From an investment perspective, would you rather see a building in the fan base and sort of the popularization, or would you rather see just maximizing the financial opportunities at different events?
I think it's a combination of both, right? Certainly ticket prices have been driven. You go back to your question around inflation. And so I think each individual team, each individual league is trying to do this in a very dynamic way, which is trying to do both, right? Which is provide a really premium fan experience for those who are in the arena. But I think what's different today than it may have been 5 or 10 years or so ago is this ability as a fan to engage with this content the way you want to. Just look at all the watch parties around New York, around the region. Certainly you look at the World Cup, there are watch parties in cities that aren't even hosting games around the globe. And so fans have an ability to engage in the content, and owners of that content really have the ability to expand that fan base. And then digitally, again, the technology, we're just at the nascent stages of this, but the ability for fans to engage, be on the other side of the world, but feel like they are part of that community and actively engaged in that community is really, really unique, very, very powerful. And I think you're going to start to see sports teams talk more about lifetime value of a fan as the team and the individual get to know each other better, lifetime value of a family, et cetera. It's a very, very dynamic world. We think there's a lot of really exciting growth ahead.
Dave Dase of Goldman Sachs. Thank you so much. Dave Dase there helping to run their sports effort. Coming up, we're going to be speaking with Kathy Bostjancic of Nationwide on why the markets may be overestimating odds of a Fed hike. That's next. This is Bloomberg. We do see markets that are embracing the idea of a truce between the U.S. and Iran. We are getting some commentary from Vice President J.D. Vance speaking just moments ago, talking about this truce, saying that the deal gives the U.S. enforcement over the Iranian nuclear program, saying that there already has been traffic going through the Strait of Hormuz. This is something that AMH has been talking about and reported on with Chris Wright. Also says that there has been misreporting about the U.S.-Iran deal, that they hope to release text of the Iran deal later this week.
That's going to be incredibly important because right now what you see is the White House put out what they think the terms are versus what the regime thinks the terms are. Also, the vice president saying he expects Hormuz will be open toll-free in the long term. He expects that. That is not what Iran expects. Iran expects some sort of monetary receipts when it comes to tolling or being able to allow vessels to go through. When J.D. Vance also talks about ships are enjoying more traffic, I spoke to Secretary Wright about this in Houston. He says they see an uptick of 7 million barrels a day. 20 million barrels a day is what flowed through the Strait of Hormuz before the shutdown. He says it was coming to around 15 million barrels a day, so he thinks they're about half. I will say, JP Morgan has that number more at 5 million barrels a day. The Chevron CEO told me just after that they see it more like 3 million barrels a day, but it does signal that more product is getting through.
Yeah, which potentially was one of the catalysts for some sort of negotiation agreement to try to structure some of the discussions more significantly. In the meantime, you are seeing a lift to markets. Given the news of this truce, equities across the board rallying, particularly led by tech. NASDAQ up 2.1%, Russell 2000 up 1.7%, and S&P futures up 1.25%. We are 1 hour away from the cash open. Let's get over to Yahira Anand for some morning movers. Yahira.
Hi, Lisa. It is M&A Monday. I saw that Salesforce just announced a deal, but take a look at Fox shares. They are plunging 13% in the pre-market, while Roku is getting a boost on this news that the media giants agreed to buy Roku in a cash and stock deal, valuing Roku at $22 billion. This will give Fox access to more than 100 million streaming households, and it's just the latest sign of consolidation across the media industry. Speaking of, we are seeing Paramount Skydance shares rising 3.5% in the pre-market on a major win. The Justice Department clearing its $110 billion takeover of Warner Brothers Discovery, saying the deal is unlikely to harm competition or consumers. However, a group of state attorneys general led by California is still preparing to block the deal, so there may be another hurdle there. And as SpaceX heads into its first full trading session, we are seeing shares rising nearly 6% in the pre-market after its blockbuster debut, getting a boost from comments by Elon Musk over the weekend that SpaceX could generate over $1 trillion in revenue by 2031. That would be a dramatic leap from the nearly $19 billion it generated last year. Lisa.
Thank you so much, Yahira. Meanwhile, the Federal Reserve preparing for its first rate decision under new chair Kevin Warsh. Bloomberg's Enda Curran joins us now from Washington. Enda, great to see you. A real question about what will be the focus at this Fed meeting. We have, of course, a statement of economic projections coming out of the Federal Reserve. Of course, we'll also hear from Kevin Warsh. We haven't really heard from him, at least not to directly address to the market, since he took this spot. What's in the docket for you?
Well, exactly, Lisa. It's the first time to really hear from Chairman Warsh since he took over the job. I think maybe two threads on it. One is policy, one is politics. On policy, what signal does the chairman send on inflation, especially in his post-meeting press conference? We know they're not expected to change policy, but does he come across as hawkish? Does he sound the alarm on inflation? Or does he try and thread that line, not using transitory per se, but try and calm fears around where inflation is headed, especially on the back of the Iran news over the weekend? So inflation and signalling on that is number one. Then number two, on the political side of it, what signal does he send about change at the institution, at the Fed? Does he spell out a roadmap for the kind of regime change he spoke about in the run-up to get the job? Does he offer any details on that during the press conference, or does he not? So I think plenty to look out for on the policy side in terms of signalling on inflation, and see if he gives us any colour on the political side in terms of what changes he wants to make at the Fed.
And a big criticism by Kevin Warsh of the Federal Reserve back in 2011 when he was leaving the board, but also subsequently has been the use of the balance sheet. Are we expecting to hear anything on that front this week?
It's an interesting one. It was obviously the idea of shrinking the balance sheet, Lisa, was a central part of Chairman Warsh's commentary in the build-up to getting the nomination for the Fed. Since then, though, both from Chairman Warsh himself during his confirmation hearing and people in Fed world, everyone has been kind of making the point that, look, A, there's no urgency in shrinking the balance sheet, and if you were to do that, it has to be done very methodically, very slowly, very cautiously. You have to talk to the market and everything else, sound it out. So if he does give any direction on the balance sheet, it would be a surprise if he leans into some kind of a fast process that catches markets off guard. He will want to take this steady as she goes, and certainly from his very first meeting, which sets the tone for his leadership, he won't want to get markets offside.
Enda Curran, thank you so much, as always, for being with us. We'll be with you throughout the week as we anticipate and then analyze that Fed meeting. Kathy Bostjancic of Nationwide writing, we expect no change to the policy rate at next week's Fed policy meeting, and we see the bar for tightening as quite high. Kathy joins us now. Kathy, great to see you.
I am curious what you think about this latest move with the truce between Iran and the U.S. and how that factors into the calculus at the Federal Reserve this week.
Well, thank you, Lisa. Happy to be here. So I think this allows oil prices, gasoline prices to continue to ease lower and maybe even more quickly than we expected, frankly. But I think this takes pressure off the inflation picture, assuming this continues as kind of advertised. And we do see gasoline prices. That's been the main factor pushing up inflation. And we really haven't seen it spill over to other goods and services and the core measure in a large way. You know, jet fuel, diesel. But beyond that, it's been very focused on energy.
Yes. And people also look, though, at the housing picture, and you actually did see a tick up in owner's equivalent rent. You did see a pickup in housing inflation that otherwise had been going in the opposite direction. Small, 1 month, I know. But there are signs that there are other pockets of inflation, whether it's AI, whether it's the fact that wages are starting to tick up on the margins, a good thing, still not really at inflation yet. But a sense of strength that potentially this could really boost, given the fact that people see consumers' pockets as being relatively flush and willing to be deployed.
Yeah, I know. I think those are all good points. I guess what I see is those lining up to make inflation maybe a little sticky on the downside, but it doesn't mean that inflation is going to stay elevated. And I think that's a key difference. I don't think the Fed is going to be looking to cut rates anytime soon, right? I think they're on hold for a very long period of time, probably into next year. But I just see that bar for raising rates is pretty high. I just don't see broad-based signs that the economy is overheating. There are little pockets. Like you said, we're keeping an eye on owner's equivalent rental inflation. But I don't suspect that we're going to get another 0.3 increase next month. I think we may have troughed, right, on disinflation in the rental sector, but it doesn't seem like we're picking up, is my point, outside of energy.
Could they keep the easing bias now?
I don't think so. I think that's
baked
tough.
in.
Yeah, that I think has to go. It's already been, communicated to the markets, and it is the right thing to do, right? It's
But it's communicated to the markets by other members, not the Fed chair.
This is true. So he's boxed in a bit, right? And I think it was based on their real beliefs, the different Fed officials, but in effect, it does sort of box him a bit. I do think he'd have a hard time arguing against that, frankly. And he himself may just want to hold the line against the idea of a rate hike. That's probably where he's going to come in on that.
Who is Kevin Warsh? I know this sounds like,
well, the real Kevin Warsh stand
Yeah, well, I mean, we're talking whether it's Eminem or a biopic, there's this sense that we don't know the Kevin Warsh in his current iteration. We know who he was back in 2011, and we know who he was in the hearings, and those are two different personalities with two different goals about what to do with the Fed.
True. And once you're in that seat, it's a lot different, right? It's a lot more responsibility and things that you have to think about and worry about. And then, of course, some pressure, outside pressure as well. So, but I think he's been pretty clear, at least he's formulated his view that Fed should be communicating less, right? So I'm going to be listening very closely, ironically, listening to his communication to see what he wants to do about communication, right? So that press conference is really going to be quite interesting. And does he submit a dot plot estimate, right? Because he's been against it, right? If he wants to stay true to his argument, he shouldn't.
I love that you said this, because I feel like people have been rolling my eyes as I've been pushing this. I think it would be a big deal if he doesn't submit a dot.
I think it would be a big deal, but it would be consistent with his view, right? And it's a sign, right? And even Chair Powell has struggled with the dot plot. I mean, I think we all do, frankly.
I think that everyone says that if we get rid of the dots, it probably is a good thing, considering that it's essentially throwing a dart into a dartboard. That said, there is an issue of how you really display forward guidance, and a lot of that will come. In my mind, what I want to see is, does he lay out artificial intelligence, whether that's disinflation, or some sort of overarching guide to the way he sees the world and how that will inform his ability to either discuss the Fed policy as being restrictive or not restrictive, et cetera. I mean, do you expect that type of statement, or do you think that it's going to fit into the formula of the Jay Powell type of press conference, at least the statement?
I don't think any of us knows for sure how it's going to play out the press conference. That's why it's going to be so interesting, frankly. He may refrain from getting into too many details because he's sort of suggesting the Fed's been communicating too much. Does that mean even at the press conferences, do we get press conferences after every meeting? I mean, it's just a lot of uncertainty here. And how much detail does he want to go into? As you said, does he really want to dive in his first press conference and talk about whether monetary policy is restrictive enough now or not? And trim mean, right? The inflation trim mean, does he bring that up? There's a lot that we have to watch for.
If there is less Fed communication, does that tighten financial conditions?
It's a great question. Not necessarily. What it does, it could go either way, but it's leaving the markets more to interpret based on the data where the Fed is going. And that harkens back like when I started. I'm dating myself. Well, when Greenspan, right? He would say less is more, right? And the fact that he was obfuscatory, that was a good thing. He accomplished his mission. If you heard him speak and no one knew exactly where he was leaning. So that seems to be where Warsh wants to go back to. We'll see how that plays out.
Kathy Bostjancic, thank you so much for being with us. Wonderful to see you. Kathy Bostjancic of Nationwide ahead of the Fed meeting and so many other Fed meetings. I mean, do you think that the other central banks, not Fed meetings, but other central banks around the world, do you think that they feel like they're overshadowed every time?
Yes.
The Riksbank, the Bank of England, the Reserve Bank of Australia, you've got the Bank of Japan. I mean, they're going to hike rates. This is going to be action. They're not going to do anything. They're going to hold rates, but everyone's talking about the Fed.
But the Fed is the central bank to the world. What the Fed does matters more than any other central bank in the world. And your last point is really interesting, and Jonathan's been talking about this. If Kevin Warsh decides he's not going to be that active on the communication circuit and going and doing speeches, well, then he risks having others define the direction of travel at the Federal Reserve for him, not himself. And that potentially is going to be a real problem for him.
And if you have more uncertainty around Fed policy, does that naturally create more volatility? Usually more volatility is a restrictive factor on markets. And is that kind of by design?
And I already see the president drawing up, potentially he's frustrated at the end of the year, his new name. It's too late Jay Powell, and I'm sure he's working up what he's going to call Mr. Kevin Warsh.
Worry Warsh.
No, great hair, imagine. Bad chair. I mean, that's coming.
You're already trying to come up with the memes right now. We're focused on the week ahead, and let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. Big Tech's AI debt binge continues, this time with NVIDIA looking to raise at least $20 billion in its first high-grade bond offering since 2021. Sources telling us here at Bloomberg the chipmaker is issuing a 7-tranche bond sale with maturities spanning 2 to 30 years. The Carolina Hurricanes are your 2026 Stanley Cup champions. Carolina took the series in 6 games after shutting out Vegas 3-0, securing their first title in 20 years. Head coach Rob Brind'Amour becomes just the 14th person to win the Cup as a player and a coach. Sticking with sports, the New York Knicks are gearing up for a ticker tape parade to celebrate their NBA championship. The parade kicking off Thursday at 10 a.m. Eastern in Battery Park. It will travel north on Broadway to City Hall along the path known as the Canyon of Heroes. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. We've been spending the whole day staring at the Knicks Cup by Annmarie. I will just note, though, I am getting some call-in notes about what the nickname could possibly be. Wishy Warsh is one that could be. But we're anticipating what will be, essentially.
I think at some point, the president's frustrated. He's not going to stop what he normally does, and he's going to go after
the Fed chair. Today off? You were going to take today off, weren't you?
I would have if John was here.
Up next, he's off with World Cup and the U.S. Open. Up next, setting you up for the day ahead, plus Greg Boutle of BNP Paribas bracing for volatility after the historic SpaceX debut. From New York, this is Bloomberg Surveillance. Good morning.
The path to a Fed rate hike, in our view, was never going to be just about inflation and absolutely not just about oil-driven inflation. If consumers in general feel freer to spend, they have more disposable income to spend on everything but gasoline, then just maybe there's a bit more resilience.
That was Seth Carpenter of Morgan Stanley after a deal potentially will embolden a consumer to keep on spending. A lot of big tech companies are emboldened this morning and just in general when it comes to capital raising. Yes, we got the SpaceX IPO. The debt market still continues to be fertile ground for some of these tech giants to raise money. NVIDIA shares up 1.3%, curtailing some of the earlier losses
in pre-market trading, selling about $20 billion, at least $20 billion from its first investment-grade bond offering in 5 years, announcing it this morning. There are 7 tranches with maturities spanning 2 to 30 years. Price talk on the longest tenor is a spread of about 0.9 percentage point above treasuries, which is very, very low. Just to give you a sense, right now, the average spread, the extra yield over benchmark rates on investment-grade bonds is about 0.7%. So that means it's 0.72%. This is close to the lowest level in about a decade. NVIDIA, yes, has a longer tranche, longer maturity than this, selling at just slightly above that. Right now, the market is wide open for these deals.
And for the most part, the market's absorbing it. Investors are absorbing all of this supply. And we've seen this from Alphabet, as you mentioned earlier, from Amazon, tapping every corner of the debt market, going around the globe to find this, to basically finance the entire AI build out and the compute capacity that these companies are going to need. Of course, I look at this, though, and I start to get a little bit worried about circular financing in terms of all of these companies. They need this money to invest in other companies that are also tapping debt markets to invest in their same companies,
Yeah, it's one big happy investment raising process. Counting down to the opening bell, here's a trading diary for the week ahead. Today, the G7 meeting in France kicks off. Tuesday, we get a Bank of Japan rate decision as well as RBA. Wednesday, retail sales, a Fed rate decision followed by a Fed chair Kevin Warsh press conference. People don't know what to expect. Will he dot or won't he? Thursday, another round of jobless claims. And on Friday, U.S. markets are closed. Of course, there is this deal that could be signed. So maybe Annmarie will make her way back to the studio. They're going to be signing a peace deal. She's looking at me in horror. So meanwhile, SpaceX extending gains following Friday's blockbuster trading debut. Greg Boutle of BNP Paribas writing, when IPOs trade, there is a flurry of activity in the first 2 weeks. The selling flows in equities that we expect over the next month create a risk of high market volatility. Greg joins us now for more. Greg, great to see you.
Likewise.
So how much do you take in terms of signal from the early trading in SpaceX, considering that a lot of people thought that it was priced high and has only gone higher?
I think it was a pretty healthy first day's trading, but when we go back and look at prior IPOs, the range of outcomes can be very wide. First day's trading doesn't necessarily give you too much in terms of signal.
At this point, though, going forward, what are you trying to glean from this particular IPO, given that people said that it would set the tone for Anthropic and for OpenAI, but also for the space economy and also just in terms of how robust markets are?
Yeah, I think we're in an environment where liquidity is incredibly important and gradually becoming drained. So how these kind of capital raises are treated by the market and traded is incredibly important. We have a lot of liquidity events coming up. So obviously we've had the first day of trading. There are a lot of liquidity events for the stock over the coming weeks. How those trade, I think, is important for the broader market.
Which ones are you looking at? What's coming up?
So, I mean, today we get the launch of levered ETFs. So it'll be interesting to see how they affect the trading. Options trading starts tomorrow. We then get a series of index inclusion events, NASDAQ being the most notable, which is over the other long weekend, 4th of July weekend in the US.
It felt like SpaceX really not only hit the bar, they over-exceeded. You're putting a little bit of risk out there. You don't think they're out of the woods yet?
Well, I think that when we look at IPOs, historically, you've seen plenty of IPOs trade really well in the first week and then struggle. We look back at something like Meta as one of the last large tech IPOs, traded well on the first day, halved over the coming couple of months, then went up 200%. So my message is very high volatility around IPOs is normal.
The volatility could be a good thing. In terms, at least according to right now, people are looking at volatility. It means buying opportunities. I mean, essentially, that's how everyone has been taking every single dip that we've seen. Why would it be different this time?
We titled our 2026 outlook by the dip in spot and volatility. So far, that's been the right market. It has been a trading market, and you take advantage of these opportunities. I would say that the number of liquidity events, the amount of issuance that we're having, cumulatively, should start to have an effect, though.
You talk about liquidity events, and at the same time, people are saying there's just so much cash on the sidelines. There's this common phrase. I get a lot of pushback. People say, you said those words, it's wrong. There isn't cash on the sidelines. It's a T-bills. It's earning something. There's actually yield here.
Right.
How much is there actually cash on the sidelines that can come in and absorb some of this paper without having to sell other assets?
Ultimately, it's impossible to know, but I would say the last 10 days price action shows us that there's not as much as maybe people think. We wrote a note kind of a couple of weeks ago suggesting that the SpaceX IPO would need people to take money out of the market. And when you look at some of the stocks that have underperformed over the last 10 days, some of the stocks that have seen the highest volatility, they are some of the most owned names by retail. So we absolutely think last week, some of the volatility that we saw and the prior Friday was people making space for the SpaceX IPO.
There's a sort of interesting development in markets, which is that even when there is volatility in a specific sector, it's like, the pistons in an engine, right? So when that goes bad, then you have, everything else going up and a broadening out in terms of a trade. Why would it be any different this time in terms of just a ball of money that's washing around and all of this and just sort of shift somewhere else when there's a moment of volatility?
Well, I think in the last couple of weeks it hasn't been. And I think it's been astounding, some of the dispersion and rotation that we've actually seen on some of the large down days. Now, the risk to the market is that you start to have some negative price moves and you get higher correlation. That would drive much more explosive moves in market. I think over time, the weight of issuance is something that can potentially drive that.
Are we going to see more of this when it comes to Anthropic and OpenAI coming to market? People having to sell elsewhere to get in there?
I would absolutely expect to see that. I think one of the things that we've said about this is when you look at some of the flows, whether it's the passive buying flows into SpaceX, selling flows from the market, retail making space, none of these flows standalone are actually that large, but it's the cumulative effect of them. So we absolutely think that the higher volatility we've seen, particularly in NASDAQ, which has been quite extreme over the last 7 or 8 trading days, is attributable to the liquidity environment, and we are absolutely going to see more of that this year.
Greg Boutle, wonderful to see you. Thank you so much for being with us. Greg Boutle at BNP Paribas here with us on Merger Monday, on Deals Monday, on Truce Monday. It seems like a Monday where a lot is getting done. Yes, you have the backdrop of a truce between the U.S. and Iran fueling a risk-on environment, but also we're hearing deals. It isn't just Fox and Roku. Salesforce is buying an AI customer service firm for $3.6 billion. It seems like capital markets are just wide open with liquidity just being poured in.
It's a massive summer in that sense when it comes to deals that are getting done in terms of the IPOs that are coming to market. And then, of course, good news for this market is the fact that potentially this is a real truce in terms of, at minimum, getting the 600 tankers that are stuck right now in the Strait of Hormuz back to operation and coming through. The details, though, going to be a bit messy down the road.
Which a lot of people are expecting we might learn more from potentially this week when the actual verbiage of the deal is released. And then a 60-day period of further negotiation. We did hear from the vice president earlier this morning about that. And, of course, your conversation with Chris Wright, a lot's already getting through.
Yeah, he says 7 million barrels a day. Chevron cautioned it was they think it's a bit more closer to 3. But the bottom line is there is more oil getting out of the Strait of Hormuz right now.
And there's more liquidity in markets as we see all of these deals really coming to the fore. Coming up tomorrow, Keith Lerner of Truist, Victoria Fernandez of Crossmark, former Fed Governor Betsy Duke, and Torsten Slok of Apollo. As we head toward that meeting Wednesday, we have the FOMC and the new Fed Chair, Kevin Warsh. This was Bloomberg Surveillance. Good morning.